Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live on this Tuesday morning, end of the month, end of the quarter. A lot to get to. Let's start with our senior economist joining me in studio, Tracy Shuchart. Good morning, Shai.
Good morning, all.
Macro strategist Craig Shapiro. Good morning, Craig.
Good morning.
And on the big screen, the one and only senior market strategist at NinjaTrader Live, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Naples. Not only is it the last day of the month, it's also National Love People Day, so virtual hug to everybody today.
I mean, who comes up with these national, holidays of all these days? The only one I'm really very pro is Dog Day.
Of course.
Of course. Come on, man. I love my dogs. So end of the month, end of the quarter. Oh, of course, and good morning, Chad. Hope everyone's doing well. Should be a busy day today. End of the month, end of the quarter. Usually we'll get some fireworks, mostly on the close. I'll talk more about that this morning. But I know there was a good bit of headlines to talk about, so we'll start with you, Shai, as usual.
So we have quarterly rebalancing and JPM collar roll today, just as a reminder. Also, Trump is going to deliver an announcement at 11 a.m. today at the White House. No clarity on what that's going to be about, so we'll find out. So heads up at 11 a.m. Then we have, big news in the oil patch, terrible news in the oil patch. We've got Total Energy plans 7.5 billion cuts on weak energy prices. Exxon to cut 2,000 workers on low energy prices. And we have Imperial Energy, also owned by Exxon, to cut 20% of its workforce on low energy prices. And so just when we have the IEA turn around and say, we need CapEx in this industry, and as I've been saying, low oil prices these prices are not great for oil companies. So we are starting to see layoffs and starting to see cuts from the majors, which is big because we've seen this happen in the shale patch. But we're talking Total, Exxon, and Imperial, which is owned 60% by Exxon. So big things going on in the energy world that sets us up for a large problem later down the road as far as production is concerned. Then we had Trump set wood tariffs in a bid to boost the U.S. industry. He had a proclamation yesterday stating that they're going to have 10% tariffs on imports of softwood, timber, and lumber, as well as 25% levies on kitchen cabinets, vanities, upholstered wood, and upholstered wood products. To shore up domestic manufacturing. So more tariffs, still not over yet. Obviously, big news today, of course, is the looming shutdown of the U.S. government. We have J.D. Vance said he believed the U.S. government is on track to be shut down. We still haven't gotten any clarity between the Democrats and the Republicans on this on what they want to do exactly. And just as a reminder, this happens at midnight tonight, so 16 hours left to see if we do shut down or not. So that's going to be obviously headline news today to see if we can. The problem there is you have to get 8 Democrats to side with them, and because Rand Paul already said he'd say no, who's a Republican, so you got to sway 8 people. We'll see if that's doable or not. But just as a reminder, in the event of a shutdown, essential services continues. That means Social Security, Medicare, Medicaid, law enforcement, military, air traffic control, federal hospitals, and the U.S. Postal Service. So this really only affects national parks, maybe some regulatory inspections, and maybe some processing will slow down a little bit. And then obviously you have federal employees furloughed without pay during this shutdown period. But again, all essential services will still continue as normal. And then that is it. The JPM collar roll, just as a reminder, we'll have the, the 49.55, 58.70 put spread goes off the board, as well as the 65 2:05 call, and they will put on a whole new roll, and we'll have probably know that by 4 p.m. today what that was.
Okay, cool. I look forward to seeing what that is. I mean, again, like I said, it was really didn't matter the last one, but the first one was a big area. We'll see. Craig, what'd you see overnight?
Yeah, just on this government shutdown dynamic. A lot of color about, normally this doesn't really do anything for markets. Markets really don't care about it. It's something that typically gets resolved in 2 to 4 weeks, and the government workers that get furloughed get put back on. Not really a material hit to GDP, so typically no issue there. One of the departments, though, that is shut down is the BLS, right? So we will not be getting government data as early as Thursday with claims, and then more importantly Friday with non-farm payrolls. So it's a different dynamic this time. I mean, this is the first government shutdown in the zero data expiry world. We haven't had a government shutdown since 2018, and now you have had folks using daily options to hedge portfolios into events like an NFP. And then we get that sell vol dynamic kind of after the event, no matter what happens. If you don't have that this time, it kind of changes the dynamic of trading this week. Normally, that first week of the month, we have the cadence of jolts, ISM, claims, NFP. Well, now if you don't have that data in the back half of the week, it might change how people are thinking about hedging portfolios here because you don't really have that event risk. And so, I don't know, it's just a different dynamic, something I've been thinking a little bit more about. We get jolts later this morning. We'll see if that weak job report we got last month was evident in the openings and quits that of the month as well. So quarter end, but a bizarre dynamic with this government shutdown at play here. And if Trump is serious about firing federal workers, like there's been some talk that he might, that might actually amplify what happens here. And so you get some more deteriorating labor market momentum as we push through October. And then that dynamic of this K-shaped economy we've been talking a lot about, could continue to, decelerate there for that lower part. So,
yeah, I mean, I didn't even think about that with the no data and how then the options positioning would be this week. That's something really to take an eye on.
And if we don't have that data, that's going to make ADP on Wednesday all that much more important.
Yeah, because it's not a government data point.
Correct. It's about private payrolls.
And then all the speculation begins around what that number really means. Boy, a whole lot to talk about, and really for people on Twitter to argue about, which they don't need more to argue about. But that to me is probably the one thing that really does change what this week could be is the shutdown, not the direct impact, but how positioning changes. Right?
Absolutely.
Sentiment, positioning. I mean, that's what we look at here as traders. So that's something that I think becomes really interesting. Jimmy, let's take a look at the tape overnight. End of the month, end of the quarter. You're coming in a little bit soft. We got S&P just below 6,700. You talked about that yesterday on the close with the boys, as that was a pretty important area to watch, 6,700. I think you guys were also talking about like 97. But here we sit right now, which was interesting. They took out the overnight Sunday Globex low. And then the Bollinger Band started to come back inward, which to me is, it's starting to, I could tell you this, that when I look at this, and I know I'm going to go through the whole tape like I always do, taking out the opening range Sunday night low and going into the end of the month, it's not really bullish to me. But here we are, we're down a little bit. We'll see how the day ends. NASDAQ's at 24,792, down near $45. Russell down $9, 24.42. Dow's down a cool 100 at 46,512. Natural gas is the shining spot right now this morning in energy markets. It's up 12 ticks. Big deal. It's at 3.279. And then you've got heating oil down nearly 2%. Crude oil is down 2% at 62.15. Cannot hold a rally. Shai, we'll talk more about this with you again. We know we already had that crude oil news, but again, cannot hold a rally in the high 60s. Gold this morning down $14. Here's my thoughts on gold, everybody, and I want you to talk about this as well, Jimmy. Gold has been a buy the first day of the month, a sell the last day of the month. Go back and look at the charts. They come in and they buy it the first day of the month. It's bid. I would not be surprised to see it up again strong. Farm and I are on later today. He and I have talked about this. Every time I'm on with him, I'm like, first day of the month, gold is up. It's been like that all year. Mm-hmm. I expect weakness throughout the day in gold today, followed by strength tomorrow. It's been a theme. Watch it. Go back, look at your charts. It's interesting. Basically, the longer-term traders are going first day of the month, take them. Last day of the month, they take some profits, and this has been consistent. I've seen throughout the year. We've got other metals. We've got copper is down 21 ticks at 4.87. Silver's down modestly 1.33% at 46.37. Platinum down $32, sitting right at 1,600. Bonds are a goose egg, zero flat. 30 years at 116.27. Same with the ultras. And you got the short end of the curve up modestly. Yes, really nothing. 4.12 in the 10-year. You got British pound up against the dollar, euro up against the dollar in decimals of percent. So the dollar's slight bit of weakness, but very, very little. But again, not against Swissy. That's what keeps continuing to be interesting about that. It's not up against Swiss. It's up against Swissy. It's down against yen, euro, and pound. Bitcoin down 1,300 and change to 113,865. Ethereum at 41.95. And that's the tape. Jimmy, what'd you see overnight?
So, yesterday we had some high hopes that maybe we were going to have some trends and some breakouts and some movements, but everything seems to be kind of, not everything, but a lot of these markets are going back into their long-term consolidation range. I mean, crude oil, bonds, Bitcoin, even equities, they're kind of consolidated sideways now. And, we thought, well, maybe yesterday we're going to get some movement because it almost seemed like risk on, let's go. And now it's kind of pulled back. These markets have kind of pulled back into that consolidation range, that sideways price action. I don't know, maybe it's anticipatory for what's going to happen with the government shutdown. I don't know. But so now we're back into thinking about these markets in terms of range trade again. And crude is the most obvious example where we kind of second day in a row sold off all the way back down to the bottom of the toward the bottom of the consolidation range.
Yeah, and what do you think about this gold first day of the month up, last day of the month down? Now, I actually want to talk with Pax about that a little bit because that's something that we would see a lot in the pit. I used to trade the first day of the month and last day of the month were like the 2 month days I always traded no matter what, just because the flows were more transparent. And it was like you come in and if I, on the first day of the month, if I saw the brokers all like this, I'm just buying, and if they were like this in the last day of the month, I'm selling, right? And that was in a bull market, a very consistent thing. But what are your thoughts about like that? In the gold tape?
Yeah, to be honest with you, I've never really gone back and done a historical analysis on that. But today, gold market is strong. I mean, yeah, we have a red candle today, but we're just so far above that 80 MA and dancing up along it right now. I'm not surprised if there's some profit taking or some covering of some sort going into the end of the month. But I think it's going to be short-lived. I mean, we have some targets here. Yesterday, we didn't quite get to, if my analysis is right, we didn't quite get to 3,900 even. We got a couple ticks. We got close to it, but I think we missed it by a little bit. Yep. That's still a target here. We have a probe up there. That's what I'm calling that wick that's way up high on today's candle. So we'll see what happens going forward with gold. But yeah, if there's some selling going on, I think it's going to be short-lived.
Yeah, no doubt. And again, it takes to the end of the month to really see it, and then it gets absorbed, and the first day of the month it turns right back around. People in the chat want to see the boomer bands. Don't worry, we'll have them on with Farm later. We'll go back to you, Craig, this morning. Again, we didn't talk about it with Jimmy, but he brought it to my attention yesterday. Let's talk about the dollar. What's going on there? Like, is that still the market that we've got to be watching each and every day? I know Shai's going to say it is for sure. That's why I didn't go to her on this. But, dollar weakness is modest, but again, dollar just doesn't seem to want to rally now, and I'm wondering, what you're looking at there.
Yeah, the administration wants a weak dollar. We've been talking about that for a while. That's a targeted goal, is to improve manufacturing and to bring back jobs, and so that's a concerted effort that the administration is pushing against, and that it seems like it's a fairly consensus trade. People want to be short dollars for a variety of different reasons. Now the Fed's going to be cutting rates into either a slowing economy or an economy that doesn't need it. And so there's a lot of dynamics in play there for the dollar to be weak. And yet it stopped breaking down, right? It seems like it's been range bound. It's been consolidating here sideways. And it almost seems like, we're potentially getting to a point here where if we can't go down, then we're going to go up, right? And so, I don't know, we're moving into a pretty important data series, in October here for the new quarter with this labor data that's coming and then inflation. Hopefully we get that data next month. But we'll really get a sense here. Is the global economy reaccelerating, or is the labor market really showing, continued signs of strain here? And we're moving into a more risk-off period. And I think, that labor data is a problem. And the other thing we're seeing more domestic U.S. bankruptcies, right? There's another big auto bankruptcy, First Brands, Cleveland-based auto parts company, up to $50 billion of liabilities. And so, some of the old economy areas of the markets are struggling, continue to struggle. And so absence the AI CapEx build out, America's not doing so great, right? And so, the question is, can that AI CapEx build out, drive everything back up again? Or are there going to be some headwinds developing on that front, and the rest of the economy kind of pulls us back down? I think that we're going to learn more about that, in the coming days and weeks here. And as we get into this earnings season, and companies reporting how much of the strength earlier in the year was due to tariff pre-buying, and now we're in kind of this reality of a much more sluggish economy and sluggish labor market.
Yeah, I mean, the AI trade, we'll call it, right? I mean, I think that there's so much adjustments that come from this, right? I mean, obviously, they're driving the big seven higher, and we get that, right? But I would say in every bull market that I have experienced in the 30 years I've been doing this, there's always one part of the market, and usually it's technology that's driving everything else up. And a lot of times the rest of the market doesn't always look great. There's been a few moments where that's been the case, where I used to look at the Dow theory when I started in the 90s, and that has just gone totally to the wayside, right? Like now it's just the top markets move it. But I think there's just so much adjustments that come from an AI boom. Like, I mean, now every time I'm watching TV, I see a ChatGPT commercial. I don't know if you guys have noticed that as well. And so, like, it's changing behavior, and how do we all adjust to that? So I think that along the way, you're going to have a lot of bumps and bruises. Shai, I want to stay with you about the dollar. Or you want to say something?
So, yeah, well, I just wanted to, when we're talking about the K-shaped economy and, what's going on, we just had a report out from Barclays saying that Americans are increasingly falling behind on subprime car loans, and that consumer credit is getting weaker. So we really need to keep an eye on that as far as the health of the consumer, because if you're starting to see problems in the subprime credit markets, that's an early indication that we may have a problem. So,
we've kind of seen that before,
right?
Yeah, we lived that one.
All right, and so, and then on to the dollar. We also traditionally, when we talk about government shutdowns, when we've had one, or talking about it, we do see weakness in the dollar in front of that. So that's not surprising. That said, we're still at 97.7. So it's not like, it's completely falling out of bed, but I always keep an eye on it. It's the first thing I look at in the morning. Yeah,
no, exactly. Like Craig said, it's like it's not going down and falling back on what you say. It's not, it's not like it's getting totally weak, but again, we keep an eye on it and see what it is. Let's do a preview of, we've got a big data week. Maybe.
Maybe.
So talk to us about what's coming out today, and maybe preview the rest of the week. And I think I'd love to hear your thoughts more about, if we did get a shutdown, potentially that implications of not getting that data, what that looks like.
Right. So for today's data, we have at 9 a.m., we have housing price index and inflation, 20-city inflation. Neither one of those is going to be very market moving. 9:45 MNI, Chicago PMI, not very market moving. Everybody will be watching JOLTS at 10 a.m. and Consumer Board confidence. And then 10:30, we have Dallas Fed services activity, not a market mover. So really everything, that 10 o'clock data is going to be important.
Yeah, Pax has got everybody calling Joey Jolts. So we'll be watching the Joey Jolts number, Pax, if you're out there. Look, Cooper said it, Joey Jolts. See?
And then tomorrow is going to also be very important. We have ADP. Again, if we do have that data canceled from the BLS, ADP is going to be more important. And one could argue, I argue, that ADP is actually a better barometer for the health of the labor market, in my opinion, because it is private payrolls, because it is real-time information, where the BLS non-farm payroll is a survey, and really they don't get through. When they report these numbers, most of the survey participants haven't even answered the survey yet, and that's why we're seeing bigger and bigger revisions, as well as the birth-death model that they changed in 2020. They need to revise that, and so we continuously see that information becoming maybe not as important important as we keep seeing these huge revisions in the data because it is lagging data.
Yeah, exactly. I'm sure we'll be talking about this a lot more throughout the week. Again, good morning, chat. Hit that like and subscribe button. We're on our way to 150,000 where we're going to be doing a lot of giveaways across the board. All the team here at Ninja is going to be doing giveaways, and then we've got a lot of the content creators doing a bunch of fun stuff once we hit 150K. So it'll be a whole week of fun things that we'll be doing, and we appreciate you all joining us here each and every morning. Jimmy, I want to go back to you real quick. Bond market, it's flat. We had the move lower in bonds earlier, right? Then we were in this consolidation, and then we had this move higher. They tried to break out, get above 118, got nearly to 119. Now we come back in. We're sitting right at Pax's pivot. He said 116.25. I've been watching it every single day. This is his quarterly pivot. The last 6, 7, 8 sessions, it's been nearly the high of the day. Today we sit here. We're sitting just above it. What are your thoughts coming in today in the bond market?
Yeah, I mean, a couple days after the FOMC, we ended up kind of starting a consolidation range, like I'd mentioned. We're at the higher end of it right now, but we're still at 116 handle. I mean, I'd frame the bottom of the conversation at 116 even, and then the top of it, where we're at right now. But there's no follow through from yesterday, right? Yesterday we had a decent pop up for whatever reason. Today we're kind of stuck there at the top. Moving averages are kind of, ho hum, a little bit sloping upward, but not a lot. Cash yield is 4.713 today, still above that 4.7 level. Stochastics maybe trying to fight their way back up off the mat, but right until we see a breakout here to the upside. I'm feeling like this is still going to be in a longer term consolidation mode here. We'll see. There's no retracement really from the move from the low of September 3rd up to the FOMC wick high. And it's just kind of, kind of sitting there. So we'll see if we get a breakout today. Maybe we will. I don't know. But unchanged so far this morning.
Yeah, I agree with you. I think we're in a longer term consolidation here. We're all on hold to see what's going to happen with rates, but we're going to always keep an eye on what the bond market does when we have data points. So to me, that's why I wanted to bring it up, and thank you, Jimmy. Shai, quick preview of the guest.
So we have Michael Nicoletos. He is founder and CEO of DeFi Advisors. They offer traditional finance, cross between traditional finance and new emerging tech. He's been a macro investor for over 20 years. Prior to that, he was co-founder and CIO of Appletree Capital. Prior to that, he was head of international equities at Eurobank. EFG Securities, been in the industry forever, posts a lot of great information across all asset classes, and particularly about China. And so it'll be really interesting to get his take on the markets this morning.
Yeah, I look forward to it. I've been following Michael for some time. We'll obviously put his X follow in the chat and give him a follow, and then follow that. We've got Farm. Good morning, Farm. Farmer's in the chat, and we'll be talking about him. We'll be doing a whole segment on Bollinger Bands, Boomer Bands. All right, a couple minutes left before we get to the Edge Report. Final thoughts today, Craig?
Yeah, a couple things just on this AI story. The way that it gets, the way it becomes a problem is inflation, right, and electricity costs. There's two interesting nuggets. Wholesale electricity costs are up as much as 267% versus 5 years ago in areas near data centers. That's being passed on to consumers. So that's an issue, right? That's the low-end consumer getting squeezed increasingly by higher electricity costs into this AI CapEx boom. Google actually has now canceled a $1 billion data center in Indiana after residents protested that the data center would, quote, jack up electricity prices and, quote, suck away untold millions of gallons of water in an area already plagued with drought, right? So the country is pushing this in this direction to get this AI CapEx boom going and continuing, and yet people are getting screwed, right? I mean, higher electricity costs, higher water costs, higher utility bills, and AI is replacing jobs. So that's that's where the rubber really hits the road here. Can AI really build us up, or is the rest of the economy going to take us down? If we start to get more headlines about some of the problems that AI CapEx build out is causing, and the administration is kind of forced to tamp it down a little bit on that dynamic, I think that's an issue. I have a chart of the day. I don't know if we could pull that up here, but just talking about this K-shaped economy, Google searches for, quote, help with mortgages. I mean, this is indicative of what the lower end of the K-shaped economy is feeling, right? More people, more low-end consumers are feeling strained, struggling to pay bills, struggling to pay mortgages. And so, this is a dynamic that looks eerily familiar to what we saw in 2007, 2008. And, it's hard to decompartmentalize that dynamic where Trump's telling people this is the greatest economy of all time, and yet we basically have record help with mortgage queries developing again. So this is something that the markets are struggling with. This is something the economy is struggling with. And I think this is, but the rubber's going to hit the road here, I think, in the next couple of weeks. What's ultimately going to win out? Is it going to be this AI CapEx build-out story, or this deteriorating labor market dynamic that the consumer is being dragged down by?
Yeah, a couple things. One is we'll see what that does to retail sales, consumer spending, consumer sentiment down the road. Those numbers will be important to watch when you see something like that pulled up there in Google search. And you wonder if at some point they don't figure out a way to actually create subsidies, where if they're coming in and building those plants, that it actually should they take a bigger part of the electric bill to actually help these areas. At some point, I think people will start to figure that out. But that's the conversation, I think, continues. Craig, thank you so much. All right, everybody, it's about that time for this morning's Edge Report. Take it away, Jimmy.
All right, let's start with Dr. Copper. This is on my radar screen. This is a 2-month view on a daily candle. I know we talked about this yesterday, but I'm starting to feel it in the air tonight a little bit. We have a step pattern here, right? We have a swing low early August, higher swing low, and I'm kind of highlighting those rectangles. Higher swing low again at the beginning of September, higher swing low, and now we're again trying to bump up to that next step in Dr. Copper. So this is potentially has potential to move here going forward for whatever reasons, economic or otherwise. Intraday, we have some great targets as well. We're trading below the session VWAP today. So far, we kind of lost that in the rearview mirror after the London initial balance. But we do have some nice numbers. We're pushing that Jax 2 level as well at 4.88. Call resistance is up at 4.90. And then the next target up would be that London initial balance high, 4.90. Above that, previous session's high, and then Jax 3 is all the way up at 4.94. On the downside for the bears, we do have that pivot where we kind of played around with that pivot. As a matter of fact, a majority of the recent candles traded through that pivot point, 4.8590. Maybe we'll get that VWAP touch that Brian Shannon talks about, and we'll kind of shoot back down to the downside. I don't know. Zero DTE put support 4.85, and then if we continue to break out to the downside, we've got a couple of really nice targets, including that one-day min at 4.82. Let's shoot over to the Bitcoin. I'm looking at the October contract now. I know it's September, but the October contract's where the volume is. We've got about 19,000 traded so far. Again, we'll start with the daily candle here. And there's that consolidation range. It's pretty big, but considering it's the Bitcoin, maybe not so big, 108,500 about is framing the conversation at the bottom. On the top, we're about 117,800, let's round it up to 118,000. So we're kind of in the middle of there. And look at the moving averages. They're all tangled in love right now, the 8, the 21, the 50, going sideways here, not a lot of momentum. Now, stochastics does look like it's trying to cross up in above, which could be a little bit of a bullish sign right now. But right now, I'm feeling like we're kind of in consolidation. And there's even a lower level consolidation on the upside, approximately 115. Well, we're running up to 116,000. Intraday, we have some nice targets here. Let's check those out. Well below the VWAP, session VWAP. Pivot's been in play most of the morning. 130, we'll round it up to 113,900. We'll keep it there. Jax 1 is at that 114 level, so kind of an important level here. Continuation of the downside gets us to Jax 3 at 113 even, and then that one-day min is down at 112,640, important level. For the bulls, there's all sorts of levels up here, and I'll just leave it at that. But call resistance is at 115. Let's really quickly just look at the NASI today. I wanted to talk about that only because the daily chart's awesome. We have I have a contract, a volume profile up on the screen. So I'm tracking volume profile since the September 15th. And we have a point of control. The official point of control is right here, right around 24,820-ish, give or take a couple of ticks. And that's what we're trading. There's price happiness. We have some competing points of control that are not quite as big, volume nodes, we'll call it. But we're just marching up against that ADMA. Every time we get below it, buyers are pushing us back up. But again, think about the last 4 days, maybe a little bit of a consolidation range as well. And you could kind of think about that also, a similar pattern in the E-mini S&P futures. So that is this morning's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. All right, Shai, preview the guests.
So we have Michael Nicoletos. He is founder and CEO of DeFi Advisors. He's been in the industry for over 20 years and working for banks, had his own advisory firm. So looking forward to talking to him about the crypto markets and the traditional markets.
All right, let's bring Michael in.
Hello, everyone.
Michael, good morning.
Good morning. Good morning to you
How you
guys.
doing?
How are you? I'm fine. Thank you for having me. How are you?
Oh, it's great to have you here. We have been following you for some time. Great to speak with you for the first time. Here we are, end of the month, end of the quarter. We enter the fourth quarter tomorrow. Hard to believe, Michael. We know how fast time goes by. You and I have been doing this for a while, right? And so all of a sudden, here we are, fourth quarter. Talk to us about what you're seeing coming out of the third quarter. This market environment. We always like to help traders understand the market environment and what you see potentially coming our way here in the fourth quarter.
Hi. Again, thank you for having me. It's great to be with you guys. I see it a bit from a top-down view in the sense that I see a lot of liquidity in the system. I see global liquidity increasing, and I see all the liquidity from the entire world going into the US. So this is one of the reasons you see that bull market sustaining, and this is why some will advocate that the valuations are a bit high and market should correct, and that we're close to the end of a business cycle and market is running ahead of itself. But liquidity is continuing to increase. China is in a tough position, so they need to keep pumping liquidity. They're in a deflation cycle. So the only thing they don't want is for deflation to persist, especially given that there are levels of debt. So you have liquidity increasing in China, you have liquidity increasing in Japan, you have liquidity increasing in Europe and in the US, and all that liquidity flows into the US. So I think that you will continue to see the rally go on. I think there are more legs, and usually the last part of a bull market is the toughest part to trade because it doesn't really make sense from a valuation perspective. It's more of a momentum, it's more of a flow, it's more of a psychology. So I think the market will continue. I think that we'll probably, I don't know what the job numbers will be, but there's this ping pong going on about revisions and who's going to revise what and what are the real numbers. Okay, there is a slowdown for sure, but I don't know if that slowdown is a recession slowdown. But any slowdown is a gift to President Trump to advocate lower rates. So I think we're going to see lower rates from here. And I think the markets will continue, especially duration assets like stocks, like technology stocks, like crypto, and also like gold have been doing very well lately. So I think if I had to put it in a nutshell, I think that's what I see in the last quarter. I think it's going to be a good quarter for markets. Market can correct either in price or in time. So I think the correction that everyone's expecting is that consolidation you've been talking about on your show. So I think we've seen this is the way that the market's correcting. It's correcting in terms of time and not in terms of price. And I think we should see higher levels year end.
Yeah, I mean, spot on when you talk about, corrections in time versus price. I think a lot of new traders don't think about that as much. And a lot of times time corrections can feel a lot worse than price corrections because price corrections, at least in these markets, especially bull markets, are a lot quicker. Time corrections just drive people crazy and you get a lot of people, churned in those, especially day traders. So always keep an eye out for that. I want to talk about, coming in You talk about the flows, the liquidity coming into the U.S. with stocks. You also mentioned gold and crypto, which is an interesting time because everyone keeps talking about this picture that may be being painted with gold and potentially crypto, hedge against central banks, hedge against inflation, whatever you want to, characterize it as. Is there a warning sign out there that gold and crypto are going up with equities, or is this just buy everything type scenario and we'll see where the cards fall later? Why do you think gold and crypto are doing so well, actually better than stocks this year?
Well, I think gold and crypto, actually gold and Bitcoin, I wouldn't put crypto and Bitcoin necessarily in the same discussion. I think Bitcoin is unique. So I would say gold and Bitcoin in the case, and then I would say tech stocks and crypto overall. So gold and Bitcoin are going up in my view because it's a generational difference. So if you ask anyone above 50 years old, if they would buy gold or Bitcoin, they would say gold. If you ask anyone, I'd say younger than 35, if you buy gold or Bitcoin, they would say Bitcoin. And they would be advocating buying what they want for the same reasons. So I think, first of all, it's a generational thing, and it expresses the same thing that both sides would advocate. So I think the basic issue here is debasement. You see all these flows coming in, and you see the flows and the liquidity coming in from all central banks and from all governments, even if it's fiscal or monetary. So because economies are relative and not absolute, you cannot see it on the FX price because everyone's doing the same thing. So if everyone's debasing, effectively gold and Bitcoin are not going up, currencies are going down. I don't know if I make sense what I'm saying. So actually you're keeping your purchasing power alive by holding these. So I think that's what we're seeing in that. Now, when it comes to technology stocks, which is another way to express duration assets and growth and the future, and given that long-term rates are coming down, at least that's what they're trying. If this continues, you'll see this go even crazier in my view. And it feels to me, and I've been long enough to remember 1999 and 2000, it feels to me that the market is being set up for something similar. I think we're going to see something crazy going higher. Most institutional money is outside or underweight because they look at valuations, they look at all the problems that we can mention and we can list. There are quite a few out there. And retail has been buying ETFs and been doing very well. And at the end of the day, these portfolio managers need to justify their job. So at some point, there's going to be a capitulation. We're going to say, the hell with it. We need to get in. We're underperforming. Retail is doing better than us. So they'll have to do that. And given that institutional money is underweight, I think you have a big flow coming into the market at some point, which could make markets go higher. So I would put gold and Bitcoin on the same discussion, but in a different generation. And I would put crypto and tech stuff and any risk assets on the psychology and on the positive trend that the market is doing.
And I want to kind of move this conversation to stable coins because we just had legislation passed. I think this is very important. Can you kind of talk about the dynamic stable coins have on U.S. debt and U.S. dollar dominance?
Well, I think the Stablecoin and the Genius Act is actually an act of genius from the U.S. government. And why do I mean that? Okay, we all talk about the U.S. debt. We all talk about the U.S. deficits. Now, we're talking also about the global reserve currency. So I think the biggest misconception out there in the world is that when we compare countries and we compare their metrics, we don't understand that being the issuer of the global reserve currency, you have a few privileges that no one else has, and you can act fiscally a bit more irresponsible than anyone else can, because actually you're funding the world. You're not funding only yourself. So if you account that 50% of global debt issued outside the US is in dollars, you understand that all these dollars are funding the world. Now, what do these dollars need? Actually, they need the dollar going lower, because if it goes stronger, the repayment becomes tougher. So that's the basic, privilege that the US has. They can issue debt, there will be buyers, and they will be funding the world. Now, why is the stablecoin and the Genius Act is such a smart move? Because effectively, you're increasing TAM, total addressable market. So now you have the buyers of treasuries, which are governments, which are banks, which are savers. But what are you doing now by effectively allowing stablecoins to exist? How does a stablecoin function? I want to buy $100,000 of a US dollar stablecoin. So I use my fiat, I send it, I get my stablecoins, and the stablecoin issues stablecoins one-on-one versus my fiat money. But that fiat money doesn't stay in a bank account. The issuer will buy US treasuries to earn interest. So suddenly, the larger the pie of stablecoins, the larger the bid will be for treasuries. Right now, stablecoins are estimated to be around $300 billion. And I think we could see in 12 months or 18 months, this number crossing 1 trillion. So suddenly you have 1 trillion worth of stablecoins, which means you have effectively made the market for 1 trillion of treasuries. And that, imagine now if Amazon issues its stablecoin. Imagine if Walmart or anyone issues their stablecoin. They won't keep the cash as cash. They will do something with it. So the Genius Act allows you to have dollar and dollar equivalents. So it means you can buy treasuries, you can buy T-bills, and you can earn an interest. So suddenly all these stablecoins that will be issued effectively will be backed by US treasuries or US T-bills, which will help fund the US government indirectly. So I think it's a very smart move. And the fact that
absolutely.
The US government did not make it the central bank digital coin, a CBDC, which means it's controlled by the government. It's different to be controlled, it's different to be regulated. So the regulation tells you that you need to have collateral one-on-one dollar and dollar equivalents, which is fair because you protect the stablecoin holder. But if you were to issue a CBDC, it means that the government would have control on the blockchain and know exactly what you're doing, which is two different things. So I think the approach that the US government took in terms of allowing them to exist, regulating them, but not issuing them, will make a big difference in the adoption rate.
And that also expands dollar dominance, right? So, because if you're buying USD equivalent stable coins, then you're effectively still using USD.
Correct. And look, you're in the US, so you haven't seen the tough part of transferring money outside the US. I'll take you an extreme example to make a point. Now, if you're in Nigeria and you want to send $5,000, $10,000 to your cousin in Argentina, trust me, if it takes a week, you'll be lucky. And I don't know how many fees you're going to buy and how many correspondence banks you're going to go through. So imagine now you have a wallet, you do stablecoin, you send it in a few seconds, your cousin receives the amount, then converts it or uses it the way they feel. So suddenly this infrastructure allows transferability of money much faster, much cheaper, and it's built on a blockchain, which is effectively can be monitored by the US.
Yeah, I mean, I think that's no doubt that's coming. I mean, I talked about the Amazon and the Walmart, no doubt. I mean, you can see that's coming. We've only got a minute and a half left. What scares you going into the fourth quarter? Because we talked about the bullish sentiment. We talked about how markets really, we talk about sentiment and positioning. I don't think the markets are too positioned, too bullish here from what I see. Look at some data, COT data and other things. But so it's not really overbought. But what would scare you? What would change your mind, Michael's mind, about being bullish going into the fourth quarter?
Look, we can say that President Trump is unpredictable. So I don't know what he could do. I don't know how he could react to China increasing tariffs. I don't know, Russia doing another invasion or anything. I don't know how these things. So there's the things I don't know that I don't know. So it feels to me that it would be a non-market problem. If something that would scare me, it wouldn't be a market specific. It would be an overall, let's say, geopolitical or political event that could happen. And these tend to happen. But I want to remind that on Liberation Day, when Trump came out and gave the tariffs, no one expected that. and the market reacted very badly. Again, it recovered pretty fast. And I think if you get something similar, it's in all intentions from all governments not to go into the deflationary spiral, so they would be injecting liquidity. So yes, you could get a correction like the one you got in March, which is pretty significant, and you could have serious issues. But I think at the way the market is structured and the way politicians are thinking at this time, at this cycle, I think you would get so much liquidity in that you would go back up. So it would be more of a trading correction, unless you get something, very horrible, which I can't predict in terms of wars or something like that. But all else, I think it would be a correction that someone would be buying because the market is structured in a way to rebound. I don't think we're there yet, where the market will say, I don't believe anything, I have to sell everything. Let's see it in 6 months. It doesn't feel to me like the market is like that. And given that most institutional investors are underweight, I think they would get that opportunity. They've been waiting and they missed in March to get in, to come in. They wouldn't do the same mistake twice. Exactly. That's how I feel, at least.
Yeah, I would agree with that exact statement. Michael, this has been a pleasure. Been following you for years. Everybody in chat, hit the like button for Michael. Go and follow what Michael is doing on X and everywhere else he is. Michael, it was an absolute pleasure getting a chance to talk with you today. Thank you so much for joining us.
It was a pleasure to being with you. Anytime. Thank you, guys.
Yeah, great guy. Finally get a chance to speak with him. Yeah, I mean, a lot of thoughts. I mean, I think the stablecoin thing, I mean, it's coming. I mean, I think, what he talked about with the treasuries and all that, I've been thinking about that. I haven't spent too much time, mental thoughts about that, but hearing people talk about it makes total sense.
I mean, it passed. The Genius Act passed, so that, I think it's just a question of how big is the market getting.
That's what I mean. Yeah, how big is it going to get? It's going to get big. All right, Shai, final thoughts for you before we go over to Farm.
So just remember, you guys, 10 o'clock data is going to be important, and then we have some sort of announcement, we don't know what, from President Trump at 11.
Michael goes, President Trump can be unpredictable. Yeah, you can say that. All right, Shai, thank you. We'll see you in chat.
All right, thanks, guys.
Farm, good morning.
Good morning, Deli. How we doing?
I'm doing good. Taking a look at my charts here right now. I'm looking to see a couple things here. Maybe we just go right into it today. I know we've only got 15 minutes with you and I, and take a look at the charts. It's end of the month, end of the quarter. My first thought, Farm, this morning, I don't know, you probably weren't with us too early, but I talked about first day of the month, first day of the quarter. What have you and I said in the first day of the month? Pretty much every month this year, gold was higher, right? I mean, equities has kind of been a back and forth thing. But the first day of the month, I think actually equities may be a little bit down a lot of start the months, but gold, first day of the month bid, last day of the month offer, like that, just casual buy the first day of the month. Maybe we sell a little bit at the end of the month, and it's just been that continued bull run. And that's kind of where I wanted to start today. Do you remember you and I basically talking? We've talked about that a lot this year.
We have. Yeah, beginning of quarter, beginning of month, every time.
Yeah, and so now here we are, end of the month, end of the quarter. Gold's getting a little bit of an offer today, and I think something to note, day traders, is that again, just go back and look at your charts. I mean, this is something I've looked at. Really, this was something I learned from Pick Guys. Look at what they do the first day of the month here in September. Okay, let's go here and get a right date. This is September 1st, right here. They always look at the first day of the month, Anthony, okay, and then they would say, see, in bull markets, a lot what was happening in the 90s when I first started, you'd have first day of the month would get bid in a bull market, last day of the month there would be an offer, just like this kind of casual offer that would come in and out throughout the whole day, and so locals would look, in the S&P for that flow, and it just was pretty kind of regular, and you see that a lot this year in gold, and so it's been pretty consistent. I mean, the only day that, you can go back and look and see the end of August was not really a selling day, but the first day of the month has been a bid. Nonetheless, today, if it stays offered, I think that gold can be one of those trades where it's a decent day to trade against the grain a little bit in gold, but tomorrow I think that flips and turns bid again as it has the first day of each and every month. So just something to think about, context, nuance. Look at what's happening on these markets, first day of the months, last day of the months, first day of the quarters, last day of the quarters. There are a lot of times building themes, and there could be some things that could really help you become a better executor of your strategy. Like if I'm day trading gold today, I'm probably leaning on the offer more than the bid. And tomorrow I go back to leaning on the bid because the first day of the month has been a buyer. This is the beacon indicator. We could put that in chat for you guys. Go and download that because I'm actually going to go to next thing. I'm going to go to is the bond market, and the bond market. I got a sell signal back in here, and it went basically right to my level at just below 115, and so it's kind of caught in between the two levels right now for me on my stuff. Bond is the ultimate sideways trade, I think, again right now, but PAX's quarterly pivot, it's above here. So if you're day trading 30-year bonds today, just watch this level. 116.25 is pretty important. If we were to rally today and start to catch a bid in the coming sessions, I think 117.24, 23 area is a big resistance level for me in the bond market. But overall, I think it's sideways. But watch his PAX's level. I wanted to mention that at 116.25 and my offer level at 117.23. Let's go into the S&P. This gets real interesting here. I looked at this morning, and I actually got a sell signal on my chart, and I'm not going to take it. The sell signals have not played out too well for me this year. Earlier in the year they did, but when you look at what's happening in S&P, I actually do have a sell signal that came up, and the target would be, I won't take it. This thing will be a stone cold winner, but I don't really care. 67, basically 17. 67.18 area is resistance for me now. 65.92 is the target. And what do I look for here? So what I look for when I look at Bollinger Bands, once the Bollinger Bands start to come in like this, and you start to see that Bollinger Band peak up top like that, where it starts to come back inward, and I always look to see when that starts to happen, especially it's such a unique time because we came in yesterday in the opening range at Globex. Sunday night was the low. I talked about this with PAX yesterday. We then come in today, we take out the low, we go right to near that low. Now I watch 67.20 is a big area for me. If I see multiple daily closes below 67.20, I might look at a swing short. I'd probably buy options because it should happen relatively quickly, back down to 65.92. I think equities struggle here today. I don't see them getting bid too much above this. This is a scenario where, again, I've looked at this historically. It may not break all the way to my target in the coming week. Typically, it comes in anywhere between 4 and 10 sessions. But above 67.20, I turn back bullish. But if it stays below it, I think this market is probably starting to head back down to, 6,600, a price that we haven't seen since 2 weeks ago. But that's what I see in S&P. NASDAQ, same thing, but NASDAQ is above my offering area. So the S&P is the one I would sell, not the NASDAQ. NASDAQ target would come in at 24,140, but it's got to stay below 24,000, roughly 850, which it's sitting on there right now. It's not as clean of a look as an S&P. But I'm watching equities this morning to struggle in this area. I think volatility, I think we're looking at a mean reversion type trade. We talked a little bit with Michael, time consolidation, price consolidation, could be more of the correction that everyone's looking for, and that would be right kind of in line with what I'm saying. I don't think that the pullback is of any significance. That's all I'm looking at is to come back down modestly. But if it stays above those levels I talked about in NASDAQ and S&P, then it's right back probably up to new highs. But those are my thoughts between gold and S&P and NASDAQ. What do you got, Farm?
Yeah, I actually have remarkably similar levels on both NQ and ES. And, ES hit that spot overnight, hit 17. And then we tripped a level 3 circuit halt down at 6694. So that's all you're getting, buddy. I don't know what you were thinking. I mean, that's ridiculous. Yeah, I mean, I took that short and I was like, is it really going to be this easy? And I mentioned that on X, this is honestly the easiest short I've had in a long time. And I panic covered at 6,700 when I woke up because I was like, oh, God, that's enough. This is crazy. But yeah, I mean, we'll see, right? It's end of quarter. So you get the JPM roll along with the question is, are pensions done sort of rebalancing? I've got the NQ chart up here and we got this downtrend on a 30-minute chart. And, it never really read to me I didn't see much joining from active shorts from my perspective. It really just looked like just heavy selling, profit taking, longs exiting, rebalancing flows, right? And every single time, so I truly think every single time since April that we've been in a 30-minute downtrend and then shifted that structure back bullish, we've made a new high every single time. Maybe I've missed one. Even the times when we balanced for a couple of weeks, I think it still came up and made a new high real quick and then kind of failed back below. So to me, that would be a change in tone if that does not come to play. And like NQ literally stopped at the absolute last spot it could have. You could see this volume up here, this upper distribution from last week. That's literally the last spot it could have stopped, and it stopped there. But for me, the big spot on NQ for this week is 759 to 777. I'm broadly constructive above that area. And then on an intraday basis, I do have this weekly 850 spot, 844 to 856. And that played out okay on yesterday's profile, maybe up to 880 to 888. But I mean, like we did come in, we sweep out yesterday's low overnight, right? And hold broadly this 759 to 777 spot. We didn't even get to Friday's high quite. So hard to be super bearish, right? If you can't even get back to, Friday's high. But I agree, this spot right up here around 850 is kind of the tricky spot. I do think we could come up here, punch through these 880s, maybe even up to like 900. And, maybe we fail back below. Again, it's like end of quarter, so you never know. But it generally has tended to be the case that once sellers kind of mess up, it's kind of game over for them, really. So ES is a similar picture. In this VWAP, by the way, it's an FOMC VWAP that basically both ES and NQ have come down to and held. Same picture. I've been using 6,700 to 6,706 coming into this week anyway. And you could see the clear rejection of those prices. So sometimes the way that I look at acceptance is by looking at the opposite. Where does price not want to go? And at least as of now, it does not want to go back into, sort of the central distribution from last week. So, that's a good thing. My weekly spot was 19 to 21. I think it probably translates a little bit better to 16 to 19 for today. So that's kind of the spot I was using into today. So, similar picture. We've swept out yesterday's low. We've sort of reclaimed this 6,700 area. We've got an overnight double distribution, which you can see, that the upper edge of this lower distribution was offered, and then, whoops, sellers gave it back up. So, is this just an inventory correction pop that's going to get sold back down? Maybe we'll see. But yeah, this is the big spot. Like you said, this kind of 16 to 19 gets back into the meat of yesterday's upper distribution. And the thing, you keep in mind, aside from this shift in structure, which again, like to me, that would be the big changing character. If this did not follow through to the upside, I'd start to pay attention a little bit more, not necessarily get like crazy bearish or anything, but just think it's going to build out a larger balance, which I think you can argue we're in, almost like a 2-week kind of balance on the daily anyway. But that would have me asking more questions than we've had to ask in a while, because every other time it's been so bullish. The high on ES is an absolute pile of steaming garbage. I made the joke last week that, the high is so poor that I got a margin call on its paper trading account. Like it's bad. So that's not the kind of high I'm looking for to be some kind of durable high. But at the same time, we have seen some sell-offs from, poor highs or ETH highs over the last few years. So I don't just get max long targeting that just because. But today, to me, is a big day. And I will say, so let's say we do come out and we take out yesterday's low. Actually, I'm going to stay on the 30 here. If we do find some traction below yesterday's low on ES, for me, I broadly think we're probably coming to 76 to 80. This 86 to 90 spot was very well bid. There was a buyer defending that spot last week, actually on the way down and then on the way back up. So I want to be mindful of that, but I do broadly think 76 to 80. And then based on some things that RTY and YM have done, I would not be opposed to seeing a quick punch through this 76 to 80 that comes into maybe the 69 area, let's say, but actually, and then reclaim 76 to 80. And, that could be a strong look. Again, like I'm a little more concerned. If I had seen that Monday, like I'm buying it every time. And now that we've sort of traded up higher and failed, I'm, maybe a little bit more cautious than I would have been yesterday. And then same picture on NQ. I think, if we find some traction, let's say below this overnight low, so we come in, we open traction below yesterday's low, the overnight low. We've got the FOMC VWAP sitting sort of just below. So again, I'm looking for quick failures, just like we saw on ES, maybe another wick through the overnight low that just reclaimed 777. I'm taking it back up probably. But if we do actually get some kind of traction, I think broadly 642 to 669 is coming into play. And then sort of a same type of spot around these 620s where, maybe sellers, get through this 642 and then just get brick wall because we dropped some demand on that weekly VPOC to me. So I'm not going to get uber bearish, but I would start asking questions if this shift in structure did not lead to new highs. And there was a very, very decent seller that popped in yesterday. And honestly, I wasn't even paying that much attention. Kind of caught me by surprise because I had some personal things going on yesterday with the family, but not bad at all. So, maybe if pension funds aren't done selling and they have more to go today, we see an offer come into the tape. And then the question is, when they're done, what happens afterwards? And we've seen what happens afterwards every time for 5 months now. So that's kind of what I'm looking at today. Open mind, but relatively neutral. But I have to lean on this structure shift and kind of give favor to the bulls until they've lost it.
Yeah, no, I mean, I agree. I mean, again, it's why I'm not even taking the short. I do not love taking initial short setups that I get in these such strong bull markets. I mean, it's one of those things where if they start to prove it, if it starts to happen, it's it's easy to kind of just go along with it. I like trades that are underway. One of the most difficult things to go from a day trader like I was for many, many years, short-term scalper, just complete kind of animal to slow down and wait for stuff. The hardest thing for me to wrap my head around was getting into moves that are underway versus putting positions on as a swing trader against primary trends or moves that are not working right away. Because as a day trader, so much of what I did was about the immediate reaction. If it started working my way and it was working, I would just go in and I'd add and I'd do all just trade aggressively in that area. As a swing trader, you get in, you're kind of oh, it's just drifting against you. It's just difficult. I'd rather get into things that are starting to work and pay up a little bit and just trade smaller. That's helped me kind of go from that transition. So anybody that's ever going to go from a day trader to a swing trader, it's the hardest thing for me was that little bit of okay, you don't need to be in right away. You got a wider stop. It's okay. Maybe you put on one or two here. If it starts to go, like I did this earlier with the Russell, I slowly accumulated a position over a few days. And it's especially against primary trends, everybody. And I know most people are day traders right now, but just goes back to what Farm has said. You could be a little bearish. I think there's some rotation, but like you say, Farm, and I love it. It's one of the best things. It's I'll rent a short, but I'm not going to marry one. And so I think that's where we are right now. But watch the tape next couple of days. It's going to be interesting. Farm, we got to end it there. You're the best, my brother. Always great seeing you. Everybody give Farm a little follow on X. Check out what he's doing with his Substack. He's my guy, man. I appreciate you being here.
Appreciate you, Deli. Take care.
All right, everybody. It's Tuesday. We're getting near 150K in the NinjaTrader Live YouTube channel, which is awesome. We can't thank you enough for doing that. So hit that like and subscribe button here to while you're in here today. It's free, as Jim Cagnina would say. And again, when we get to 150K, all of the content creators, traders are going to be giving stuff away. We're going to be giving a bunch of stuff away here at NinjaTrader Live as well. We know Pax is giving away Ferragamos. I think we're going to see. I know everyone keeps wanting Tanya to give away a money gun. Maybe, I think we probably can make that happen. I know we keep getting people talking about that, and we haven't talked about what Merritt's going to give away. Merritt's going to be giving away a really small mustache brush. That's what he's going to be giving away. So if you're interested in that, you should hit the like and subscribe button right now because, I mean, that's not something you're going to go buy for yourself, is it? So you're going to make sure that you sign up or hit the like button for that because that comes very special. Small little envelope will come in with your name embroidered on it, delivered right to your address. We're not sure what Chris is going to give yet. Oh, it's cat-shaped fractal firming? Yeah, he's right. He's probably right. So anyway, what is Tuesdays about? It's about Merritt Black. We've got Christian for trading boxes, otherwise known in these parts as black boxes. Let's get ready to trade the open with Merritt and Christian. There it is. I mean, look at how perfectly combed that stash is. If you guys don't hit the like button for this giveaway, I don't even know what are we doing here. I mean, good morning, guys. How are you?
Hey,
What's up, guys?
how are you guys doing?
Real nice.
We're doing good. Real nice. That real
Very
tomato
nice.
ketchup, Betty? All right. So, guys, end of the month, end of the quarter. I spent 15 years on the floor trading in the pit, looking outside the pit. My favorite day by far, it's not even close, was the best day historically for me was the last day of the month. And I only traded the last 5 minutes. I never came in the open. I always traded the last 5 minutes. I just come in. I'd actually come in with 30 minutes to go, and we traded it in a lot. Just all the flows that come in at the end of the day. I've always enjoyed this day. It's changed so much. Zero DTEs totally took that game away from me. It sometimes comes back, but nonetheless, it's a busy day, typically a busy day. We're going to see what your guys' thoughts are coming into it. Merritt, we'll start with you. What are you looking at coming in from the overnight?
3 weeks in a row here, Dilly. I'm on the yellow stuff. I can't think of a cool name to call it. I'm on gold. We'll just call it gold. It's moving. Look at this movement overnight. Look at these rotations. Look at this momentum. And if we were to flip back over to the S&P, yikes, right? That from here to here is the action you get versus gold. Big moves. So for me, gold has been, as we know, getting a little hot, a little overexcited, a little wild, a little capitulatory. And so, on recent sessions, we've seen big sell-offs come in. And I think that could be a potential top short term. I have no idea. I'm not a macro guy. I don't know what's going on. I don't know if gold is like Michael, super smart guy. I don't know if the 50 plus age group has it right with gold, or if the 35 and below group has it right with the Bitcoin, as Jim calls it. I don't know, and I don't care. But I look at a chart like this, and I see nice moves, nice rotations, nice momentum, and I see a chart that's gotten pretty parabolic on like a daily bar time frame. And charts like that, for me, have room to pull in, room to kind of mean revert, at least temporarily, before they resume the trend. So that's what I'm on today.
And I love that you're on gold. And I talked about this earlier this morning. Gold for the first day of the month. This goes back to the way I learned how to trade first day of the months and last day of the months.
I heard you say this earlier. I'm
Pit
fascinated.
traders didn't have charts. Like I said, you can go, I will look back. I mean, literally the best 2 days of the month for me were always the first and last day. The first day of the month was always a little bit trickier, but the last day of the month, a lot of it was based off of what the first day of the month did. And so when you look at gold, because it's passive buying, right? And you guys, especially you, Merritt, not so much Chris, it's just, you look at the order flow, right? And so think about it on like a bigger picture, right? You come in a bull market, you got a lot of people coming in, passively buying on the first day of the month. And a lot of times you'd see that same desk would be a seller on the last day of the month. And we saw it over and over again. I remember literally like watching Cooley the first day of the month. He just come
just
in
like solidifying their books.
Even on 50.
Like that's the dynamic.
It was just, it just was like that trader on the opposite side of them, that broker was just obviously facilitating for that desk, and that they'd come in and you just see them just be buying all day. You're like, Jesus, like T and Halfman, they'd be buying all day. That was the Goldman desk. I'd just be watching them doing it. And then the last day of the month, you'd watch them. And a lot of times, whatever they started to kind of do at the beginning of the day, they would do throughout. And then when they get to the close, they'd be aggressive in that direction. And so a lot of pit traders would be like, just watch these brokers and watch what they would do. And obviously the broker is from a big trader on the opposite side. So in bull markets, especially in the late 90s, first day of the month, that was a day where you just like, you come in, and if I just saw, everyone like this with their hands pointing towards us this way, you're like, man, you just cannot be short today. And they would continue to do it throughout the day. And then you'd watch the last day of the month. It was always like kind of back and forth, But like you get to the closes, if all of a sudden I saw, the big broker be like 100 and even, you'd be like, they're not selling 100, they're selling 1,000. And so you'd be able to recognize that. And that's just a dynamic I've seen a lot in gold this year. It's just like come in and it's just bid the first day of the month every month. And I'm like, this reminds me of that. And it's always a little softer at the end of the month because that same desk is saying, hey, you know what, let's rotate out of these. And then they come in and then, they reevaluate. So
guys, this is why Delhi is
again,
my quant. Look at him. Look at him.
It's total. I mean, come on, man. You can't. I'm telling you, I'm starting a sub for this. It's coming. It's going to be very expensive, though. But
look at his hair. You notice
Christian,
anything
I don't want
about
That's
him?
why I'm here.
Yeah.
I'm here for that hair.
I look good, babe.
I need
Look at
pointers, okay? In person, Deli will tell me.
Yeah, I know. I can't wait. I'm going to see you guys in 2 weeks. I can't wait. Crudele, let's
Crudele
get to
was
you
in a
this
math
morning as we
competition
get
in the
here.
Bronx. He got dead last. Look at him.
Dead last? Never.
Are you good at math?
I'm too competitive to come in dead last. Yeah.
Okay.
See. Christian, let's take a look at what you got in the charts.
Yeah, I'll go over my trade plan here for the morning. We put in a good low last week that was right into the daily 20 EMA. I think we can all sort of know that is the sort of like the trend filter that the market follows in the short term from a daily perspective. So we put in that good low last week. Ever since then, we've had a bounce to create a lower high. Now, I'll quickly touch on the daily here just because you guys see me talk about wedges a lot. We're creating the daily 9MA uptrend ended. We've pulled back into the 20 EMA, and now we're sort of wedging up. So we're in a daily consolidation, which you've talked about being an mean reversion tape. That's the daily structure that we're in. And so far, what we've done is we've put in a swing high, which was last Monday's high. We put in a swing low, prior week lows. And now we're sort of ping-ponging inside, creating a wedging structure. So if we're to continue to create that wedging structure, what we would need to see next is 770, 750s fail in NQ in order to give us that drop to seek a higher low against prior week low. If we do not break that 750s, then we can sort of lean with this the current consolidation and say, okay, maybe we're consolidating above the 750s. Maybe this is some form of acceptance up here, and then we can continue higher to maybe continue the strength that we're seeing before really possibly moving down and creating a higher low. So that's sort of the main structure I am focusing on. And then for the hourly trade plan for NQ here, if we are to continue to hold this 770s, I would say even 800 zone in NQ, maybe a test into London low. Although if we can hold this overnight sort of range breakout, we can just continue higher into this 870s zone. It reject from there, or we form acceptance up here, get scenario 1.2, a move into prior day high. If we do fail, and if we are starting that potential move lower to seek a higher low against prior week low down here, then I have the 650s area, which was that prior breakout right here, as support, potential support that can create that higher low. And I'll be looking for some bullish opportunities there if they align. If not, we can form acceptance down there and then break lower to seek lower prices. Or we just come back down to prior day low and then reverse back up. The tape is a little bit tight this morning, so I'm thinking that if we are able to hold sort of a 770s, 800 area, that we can continue higher first until we get confirmation of that area breaking.
Got it. Thank you, Chris. As usual, clear and concise. Look forward to seeing both of you guys throughout the session. Look forward to seeing both of you guys in a couple of weeks. Well, I'll see you next week before I see you then. But yeah, really appreciate you guys both. You know how much I love having you guys here. The chat loves you guys. Everybody show them some love. Hit the like and subscribe button for my guys. Boys, I'll be in chat. I'll see you guys soon.
See you, buddy.
All right, take care. Enjoy your weekend. Oh, wait, it's Tuesday.
What?
Enjoy your week. I say that on Thursdays, and we'll enjoy the future weekend that's coming.
Well, you're so far ahead in our the YouTube future. You remember we have the little future button where you can be so far ahead in the stream. You're already there.
I am.
So just fill us in on what's going to happen so we can really make
Well,
some
we're gonna
coin
go
here
up
today.
and down, so
Okay.
I'll tell you that much.
Oh me. What's up, Chris? What's up, chat?
Yeah, what's up, chat? How are you guys? Good
Hello,
morning to
hello.
all. Another gold day for you?
Yeah, it's like these Tuesday streams are turning into what's that movie? Groundhog Day. You ever seen that one?
Yeah,
Yeah.
we're pretty up here. I mean, those shorts look nice. If we can catch a trend lower.
Yeah. Yep. We I'm a pullback trader, so to me, you got the big impulse down, and so I'm looking at if kind of the trend can persist here. This move up into kind of 3850 is a test of weekly VWAP. Is well, you guys can't see that chart, but anyways, it's weekly VWAP, and so if we can reject that area, we could easily revert back towards last week's value, which kind of starts around 3800. So plenty of downside if we can catch this thing. Right now into kind of this 3850 is also a retest of yesterday's value area low. So good line in the sand. Put the trade on. I've already gotten scaled out. In fact, I had this trade on earlier, scaled out, scratched it. Now I've reinitiated, scaled out, and we'll see what happens from here.
Solid.
Yeah. I have the opposite experience of Crudele. I would say that my least two favorite days of the month are number one, FOMC, and number two, last day of I guess it's last day of the month, but especially last day of quarters as well, are no bueno for me
No?
historically. Yeah. I don't know why that is. It's not bad enough to where I like really adjust what I do, but it's something that I keep in the back of my mind that, hey, let's just take the foot off the gas a little bit. Historically, this isn't my best day. So just, not go bonkers with ads and really trying to hit any home runs, really just hit a few base hits, that type of thing.
Yeah.
That's kind of my approach on month end. I don't know if it's because I'm order flow heavy and maybe some of the month end things that happen are a little odd on the tape. As Johnny S just put in the chat, I couldn't agree more. Last day of the month and quarter has a lot of more random blips. I very much
Yeah.
agree with
Yeah.
that. It's kind of like rollover, where you get, I use that term, whether it's a good term or a bad term. I use that term synthetic order flow. People just doing things because they need to change contracts. People
Yep.
just doing things because they need to adjust their books for the month end postings that hedge funds will do, or like whatever, right? So for me, as someone who's really trying to be granular and see what's happening on the tape, all of a sudden big things happen and they're not necessarily part of the day's dynamic of what's really happening on a more continual basis. It's more of just a blip, like Johnny put it. And so I think that's why these aren't my favorite days, but I'm here to get after it. We're just gonna, not be too crazy.
Good. And gold it is. I did what you brought up last week on you're only as good as the market you trade. I don't remember if those were the exact words, but very true. It got me thinking about that all week, especially
Yeah.
when like the indices get choppy
That's right.
and you're like, why am I trading this? And then you see some other name. I mean, I've really never traded with futures, gold or oil, but it just has you, if we're looking to capture the same trend that we normally do, why wouldn't we do it in a vehicle that's producing that type of trend in that moment versus trading something that's not, and it's in a very tight range.
100%, man. That's one of the biggest evolutions in my trading over the past 10 years. I went from laser focused one market, maybe one or two markets, to, I won't bore you guys again with all the details, but to multi-market for kind of main NADRO purposes. And then I'll focus on a market or two when volatility is higher, just because of how much opportunity is just dripping from a market, when the VIX is elevated and stuff. But yeah, that's exactly it. I couldn't have put it better myself. It's why would you kind of bang your head against the wall in something that's not really conducive to your strategy when there's another market over here that, for whatever reasons, however you frame that or view it, is really fruitful for what you do. And so I think it's a really good thing.
Yeah, you have a good comment here.
I trade NADRO, but don't use the monthly, only for a light bias. So you do use it. I find monthly DVA, PVA is not really sensitive. The acceptance area, too big. Weekly and daily is enough for me. Thoughts? Absolutely. We could have the same conversation with something way out like the yearly DVA and PVA. The way that I teach NADRO is, look, here's all these time frames and here's the frameworks and principles that we can apply to them. It's up to you to try things out, see what clicks for you, what you like, whether you want to be shorter term order flow based, whether you want to be higher time frame swing based, whether you want to be single market, multi-market. There's not a one size fits all, even within the NADRO world. So, if weekly and if you're going to make weekly work as like a standalone context, you're going to need to be really good at the short-term intraday stuff, or it won't be enough. In my opinion, the more time frames you layer in to come up with good directional bias and lines in the sand, the better that incremental edge is. Doesn't mean you have to do it, but the better that contextual bias is, the more confirmation it comes from different tools and timeframes. If you're just really focused on one thing as your context, your shorter term stuff, tactics, execution, order flow read, inside of that, you're going to have to be really, really good at that to get over the hump of positive expectancy. That's what I think.
Good lesson there.
9 minutes till the open.
All right, so for NQ, guys, we are back testing this overnight breakout attempt, and so there's a chance that we could hold here and continue higher, but we're just outside of this recent super tight range we broke out of. We're still in a larger range for NQ from 760s to 850s. We really need above 750s to get going. There is something at 10 o'clock. I got to see what that is. Let's see. We have Jolt reports.
Yeah, I think that's right. Jobs data at
I thought it was something else too. Maybe not.
Mine's meant to double check those. PMI at the top of the hour. No, at 45 after. And then at the top of the hour, consumer confidence and JOLTS jobs. Gold taking a dive. Bueno. C'est bon. Magnifique.
Oh yeah, Trump is talking about the government shutdown.
Boring. Like I would not be surprised if the market doesn't react to it's like, it's not a Trump comment or anything like that. It's like the US government in general. For how many years have we had these potential shutdown? It's like, come on, guys. Who are we kidding?
All right, so I put on this long here, but I'm gonna wait instead.
What does that mean? You put on a long, but you're going to wait instead?
Yeah, I took it off.
Oh, okay, okay.
It's funny. Wait for what? There was a good long opportunity like an hour ago, but here's just I think every Tuesday that we've been on, it's been choppy for
Yeah,
NQ.
it has been. At least the past 3 weeks.
Yeah, yesterday was great. It was a great day. So able to short that high and then cut a good long at the lows. But here we're sort of range bound now. We're in a multi-hour range. Not, the hourly and 4 hour for what I look at doesn't really scream any sort of bullish or bearish structure at the moment. So I'm going to see if we can, how we react here around the 800 area for NQ and then look to engage.
I'm looking to get my second scale out of gold. I'm just looking for this either push a little lower into our developing value low for the session, or if it's like it's doing right now, trying to reverse out of this little bottom and giving a little momentum to the upside, then I'll take the scale reluctantly. Okay, I just said the word reluctantly. It reminds me of one of my favorite albums of all time. I know you're a little younger than me, so this would have been like, you would have had to have gotten into that scene and whatnot. Anyways, have you ever heard of the band Cake?
Never.
No? Okay. What about you, chat? The Cake Fashion Nugget album. I feel like that's something that maybe I don't know why. I want to say that like Tracy might dig that. I'm just guessing. But that yellow cover album, Cake Fashion Nugget. What an album. So yes, so Jay gets it. Jay knows what I'm talking about. When I said reluctantly, you immediately think reluctantly crouched at the starting line, churning and burning.
1996. That's when it was released.
Yeah, so it was even like, I was 10 years old at 96, so it was even a little dated for my time. But I remember the older kids thinking it was cool, and it kind of got me into it. Heck of an album. Engines thumping and bumping in time. The green light flashes, the flags go up. Yep, 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 yep. Their take on oh, what is that song? There was one cover song in that album. I Will Survive. Oh, yes, you guys are right on page with me. And the stream is delayed, so you haven't even heard me say
I
that
will
yet.
survive.
Yes,
I feel
they
like
did a
somebody else
cover
sings it.
of, what was that, Aretha Franklin?
Yeah.
You guys should, if you don't listen to the album, you got to go listen to Cake's version of I Will Survive. Oh my gosh. Fantastic.
All right, might be a slow open here for NQ. It's it used to be, back in the day when I started streaming on Thursdays, it was Trap in Thursdays because it was just traps. I think that's moved to Trap in Tuesdays. I would love a move lower though to seek a daily higher low. That would be a good swing buy. Let's see how the swings are doing.
Offspring. Was Offspring, was that the Give It To Me Baby? Was that those guys? Give it to me, baby. All the girls say I'm
Hopefully
pretty.
that's clipped for you for the future.
You know, I get the crappiest clips. I love our production team, but they just dog me. Just absolutely. Go ahead, play it, guys. Play the milk one. Do it. Milk. There it is. That's the only clip I've got. That's it. Oh man. Here we go.
All right. Yes, strong. Here's NQ. Oh no. Not much of a direction yet. Really hope we can go lower here. That would be fantastic.
Go lower to sell them or go lower to buy them?
Go lower to buy them. Video looking good, guys. I know some of you guys swing trade here too. Let's get NVIDIA to new all-time highs. All right, so we're seeing lower in NQ, so possibly that we're still coming into support, so we can't really get too bearish on it. We have the overnight low, 760, 770 areas, which is support. So as long as that can continue to hold down here, then I have to think that it's going to be like a sideways market at the moment. And then if we form acceptance down here at 770s, then we can see prior day low or lower. So we'll see. Let's see what we get. For now, there's really nothing much for me to do if we're stuck in this overnight range.
I'm going to take that second scale reluctantly right there in gold. That's twice that it's kind of found some quality buying from that little swing low point. So just going to book a little more P&L.
As you should.
Yes, sir. Good scale. They're ripping it higher here.
Do you scale based on what you see maybe in the tools that you're looking at or on R multiples?
Oh, we can have a conversation around this, but you and I are I believe, on opposite sides of the fence on this debate.
Let's have it.
I'm very, I think you and I are awesome to do this. I think that it's almost like I don't know you that well yet. We're getting to know each other, but I feel like you and I could like talk politics. You know what I mean? I feel like we could like be on opposite side of things and be okay with that. And you and I strike me as the type of people who are actually like able to listen and able to learn from other people who have opposing views versus just constantly talking your book. Anyways, I feel like our multiple scales have the potential to be wrong, if you will, for two reasons. And I feel that they are not market generated information. They're something that we take and place on the market, right? So, for example, if you happen to get into a trade that starts to turn and you happen to get in, it's real quick as it starts to turn and you get in. So, and let's just say, for example, your stop goes below the swing. So in scenario A, you end up with this stop. If you, and the market is, let's say, moving, oh, I'm drawing off my screen, sorry. Maybe you guys could share the full screen real quick while I do this. Let's say the market is ebbing and flowing like this.
Yeah.
We get in. If I say, look, I'm going to demand 2R for my scale out, that's what I do for my process, then that may or may not make sense. Let's look at the second example of the same situation. Market comes in. I'm just going to draw it shifted over a little bit. It starts to turn. You get in right here, and your stop is at the same spot. Now, take a look. Because of where you got in relative to where the stop is, you're going to say, okay, I'm going to scale out at 2R. In my opinion, in some situations, they could be perfect, but that's going to be kind of random almost. In many situations, if you get a better entry fill, you're going to scale out too quickly at 2R. If you get a late entry fill, you're going to be demanding something that doesn't make sense for your 2R. So do you get my point?
Yeah.
Yeah. So that's my point with R-based scale outs. I prefer to make it like, for example, all my trades that I've taken today, short here, it gave a decent move down. I'm scaling when maybe momentum is faltering. Short here, initial scale on a decent move down based on what the market is giving us that day, the ebbs and flows, instead of, well, my stop is here, my entry's here, where are multiples from that? So I'll hang up and listen to your other side of the coin now.
What are the first thing I would say is that you're talking about late entry. Well, in a more systematic process, there wouldn't be a late entry. Your entry needs to be where it's designed to be, right? So, of course, if you're going to make a late entry, to me, if I were to sort of consider a trade that was late, I would still follow the R multiples from the same parameters that created that profitable sequence of rules, right? So, but yes, if somebody's late and you're looking at 2R multiples from that, then it's most likely going to pan out your way. And then regarding, you dropping your entry from that original entry that you brought to the lower one in pink, I would increase the size in order to keep the risk the same and still consider taking 2R partials, because the way I see it is I'm able to finance my risk regardless of what market is telling you. And part of the strategy that I've created for myself is to be open to participating in the full trend that market structure is guiding you in, versus completely closing it or taking it off into some certain R multiple. So I think maybe if you have that sort of combination, like what I do, it'll do you well. Versus, I agree. Like I've seen others will take a trade, they'll close it at 2R because that's their strategy. Fantastic, right? If it works for them, great. I can't say anything. But then it'll run up another 100, 150 points. My learning process was, well, if I'm leaving that much on the table, I need to adjust how much I'm taking off at each R multiple in order to capture that trend. So it's more like I adapted to that instead of just closing out the trade at a certain R multiple. But I agree. I think for me, it's me paying myself. I don't want to say that. It's just protecting the account by taking financing the trade, and then it can do whatever it wants to do. That's what I see.
That it makes sense. I guess there's a lot of things that would even go into even having this conversation, which is how systematic are you, right? Versus kind of more discretionary. Where's the fine line between what's late and acceptable versus late and too late that you shouldn't chase? That's a bad trade, right? We got to clarify some of those things. But the big thing I would push back on a little bit would be, let's say you do get that tighter entry with the tighter stop, you size up. I agree totally, because you can keep your risk consistent with more size. But why shoot yourself in the foot on the quick 2-hour scale when the market is clearly offering more, right? Those could be situations where you get I guess it comes down to, do you lean towards maximizing the gains or maximizing risk off, where you can, as you say, finance the trade quicker? So that's a positive thing for you. Whereas I prefer, when I get that tighter stop, to maximize the reward side of it. So yeah, it's an interesting thing. Obviously, both things can work for people. And I think some of those factors, how do you place stops? How systematic are you with stops and entries? I think can play a big factor in whether R-based scales make sense.
Yeah, and I would also add that if you can, for my day trading account, I have that rule to finance the risk. In the swing trading account, I'll do what you say, and I'll look to capture the growth. I'll not take partials right away. I'll consider capturing the bulk of the move if I'm swing trading that move. Like last week on that FOMC low, I sold most of it on Monday, and that was for like 600 points. So I agree with you. If the opportunity is there, for me, I see it as, what's the objective of this trade? If the objective is to capture the bulk of the move that I think could happen, then I'll adapt my rules around that. And I separate the accounts for that reason. So the swing account will allow me to do that, and then the day trading account, it's just cash flow, right? I'm just need to produce on a monthly basis. That's more like a personal objectives versus just straight out trading.
Expectancy, yeah, just let it. Yeah. Cool. Love it, man. Great takes on those. Not surprised. Tracy, Mom, the meatloaf. Okay. All right. I like that one. That's good.
That reminds me of, did you ever see it was like early mid 2005 or 2010. It was this YouTube, like one of the early YouTube videos that blew up, and it's like this Jersey Shore type of guy who's walking around. He's always like this buff, and
I already know what you're talking about.
And he's like, "Mom, where's the goddamn protein?"
The protein. I am so jacked and tan. Well,
Yeah,
what was the name
haircut.
of that thing? Man, I hadn't thought
Haircut.
about that in a decade.
Yeah.
Do you remember the name of that? My
It's
New Haircut.
My New Haircut.
Man,
Yeah.
Bear's got it. Thank you. Oh, Jaeger bombs.
Jaeger bombs.
Oh man, the early days of viral clips, like the younger folks will just never know what it was like for, pre-YouTube. In fact, my wife and I were talking about this the other night. This might predate you, Chris. There used to be a show called America's Funniest Home Videos.
I remember that.
There was no way to just watch clips of content. It didn't exist. So people watched TV, and they would source funny clips and play them for you on the television.
Yeah.
Oh man. Bob Saget ran that show for a long time. Funny. Man, I mean, today's a nostalgia stream. I don't know why.
Back in my day.
Oh, that show is still on. Wow. So I'm out of gold. It's making new highs here for the session. I really love my decision to take that second scale here as again, we just couldn't get into these lows. When you look at this pattern off of the low, you have a market that is, where's my drawing? Here we go. Ripping down, right? Ripping down a little less, Okay. Coming up. Can we continue to rip down? The answer is no. Can we continue to rotate down from here? The answer is bull flag. Wick out of the bottom of the flag. Higher. So this whole sequence of being short from some of these areas, in terms of short-term price action, is a little higher risk, right? So me trying it here and then from here is plenty good. Last day of the month and quarter here, that's plenty good for me. I got really good scales into all of these swing lows. I'm not going to sit here and fight this. What's happening from this low now? There's been nothing for me to just jump on here and say this is absolutely super bearish. Let's get on board. At this point, I'm going to go hands off with the gold chart and wait for it to show me something again. Some type of strength in my favor, some type of weakness I can fade to look for shorts again. So it'll be hands off for now.
All right, so I got on in a long. If you guys remember, my plan was to look for 770s or 760s support if we came down there. That was the main area of support. We did come down there. We took out that. I don't want to call it London's low. It's. I have different settings, so we'll just say Chris's London low. We took that out. Had a divergence with ES in doing so. ES did not come down at all to that area, and then my 9MA reversal setup triggered, so I took that off the support that I shared, and now I'm looking to see if we can push up into 850s once again, and then maybe higher. If this area fails, then I think we can come down to prior day low or 660. So we'll see if this can work out or not.
Nice trade. Interacting, NQ's interacting with the lower edge of the distribution from yesterday, at kind of 800, 801 level. So if it can accept above that, that's going to be a good sign for your position.
Yeah, we're still got to reclaim that 800 area, but I got to try it.
Yeah. I thought about it. I don't know if you guys noticed, I flipped my chart over to ES earlier when we were coming off this low. It's not like a textbook setup for me, so just focused on the gold.
Question for you, in order to help me maybe share something that I look at a little bit better, and it combines our view of acceptance. So a lot of people always ask me, how did I know it was going to bounce? I don't, but how, and then how do I know when it's going to actually break, like support's going to break? So the way I see that is price needs to form acceptance at support in order to create a sustainable move lower. If we don't, the way I see it, if we don't form that acceptance, that negotiation out there where sort of sellers are stepping, lower from wherever they sold it from prior to now this lower area into support, if we don't have that structure, then to me, that doesn't tell me that sellers are stepping lower. If we're seeing this sort of, sometimes we see this V-shaped reversal, like maybe we can see that now, then we'll see that reversal and we won't see that structure form. A lot of people, I find that they are shorting into support and they don't know what to wait for. So I'm wondering what you could say to that or add to that. The way I see acceptance is a wedging structure, but maybe you see something on the order flow side or through whatever tools you're looking at that can help you maybe discern that structure a little bit better.
Yeah, it's a beautiful conversation. Order flow. First off, order flow for me with regard to any kind of acceptance read is really more of a tiebreaker. It's not one of the key variables. It can just, if something's on the fence, if something's a little questionable, but order flow is screaming at us, this is great, then it can tip the scales. That's the use of order flow for me in this regard. But no, I have very clear definitions of acceptance. One is time based and the other is distance based. So
That's good.
for whatever, first of all, you got to start with context. You got to have a reference, a level, something of interest. Once you have that, you have to understand, like if we look at the S&P here, you have to understand its rhythm. How is it ebbing and flowing? What are the size of these rotations? What does it look like? What's going on? Get a sense of the rhythm of that market. Once you have a sense of that rhythm, then you can say, well, how far are we ebbing and flowing on average, right, or median or something? And therefore, if we are above this and you're trying to monitor if we break below, guess what? That is not acceptance below.
Yeah.
It's not enough. The rotation started from here and it's just kind of testing below. That's not acceptance. However, if let's say the next rotation does something like this, great. That's price-based acceptance for me, distance-based acceptance. In a different scenario, to look at time-based acceptance, it is something more like this. You get below, it's not quite enough. We're still in that first scenario where it's not enough, but then it starts to do this, like you said, starts to wedge, starts
Yeah.
to spend time underneath the reference. That's the second way that we could read it.
Yeah. Good. Thank you. One thing that I'll add now, that's a good thing. I've never worded it that way where it's distance or time, price or distance. Uh, when I think of distance, I see, well, if the move started from sort of up here somewhere and you already have a downtrend that's sort of completed into that area of support, to me, there's a higher probability that we're going to continue maybe the range and bounce back up, because this current downtrend that we had from a certain high level to the support area, it needs rest, right? It needs to contract again to create another sustainable move. And so shorting after a maybe sustainable trend has taken place into that support area, you're sort of front running a potential, your idea of a breakdown. That's how I view distances. If we had a pretty long move into that area of support, to me, just at that point, we definitely need some sideways structure to confirm that that level will break. If not, I mean, the trend, to me, the move, the downtrend into that area completed. So what are you going to capture, right? When you're risking one, what are you looking?
Yeah, I like the way you see that. It makes total sense. And I think for you guys at home, this is just such a powerful thing to listen and pay attention to from two different perspectives. We were not trained the same way. We didn't have the same mentors, and we've arrived at these kind of universal standards, if you will, right? For how markets move and how you can see what makes sense versus, or what's substantial versus what's not, I think is kind of one way of putting this. And it's a big deal because one of the most common problems for traders is getting chopped up above and below a reference, right? And acceptance slows down that read and makes you look for something a little bit more substantial.
Yeah.
To shift your view or to have a view. So yeah, love the conversation. We do have these poor highs in gold from yesterday. So that'll be something to just watch and see if we take out those poor highs and then maybe find those strong sellers again. But again, if that doesn't happen, then I'm still hands off.
We're seeing a lot of weakness in tech and strength in cyclicals. So a little bit of a mixed market at the moment. But we're in that daily mean reversion move. And if we fail here, I mean, ES is just flat. It's not even, NQ is the one that's weaker. If we fail here, then we're going to see prior day low in NQ and maybe 640, 650, which is an area that I'd like to buy.
This overall down move in the S&P, in the NASDAQ for the week is fairly weak. right? The move since kind of the Sunday night highs is more of a kind of a bull flag type of move. It's a grind lower. There's not really any substance to it. That is something that's on my radar. I just think if buyers start to show something substantial, bigger picture, right? Not just like the next 5 minutes, then we could break out of this flag and be right back at all-time highs real quick, right?
All right, so no go on that trade, took a stop. NQ can now come down into this first stop Pride Day low here at 720s. And if that doesn't hold, we'll see 650s. Only 990 subs left for 150.
All right. That's fun.
Chris, you won't believe it, but when Merritt was born, people didn't have email and had to use something called stamps. Well, back in the day, they had pigeons. So
Yeah. Let's keep one-upping each other on the back in the days. All right, I banged into a little scalp long S&P here. It's like your trade, but better because I don't mean that like my trade is better than yours. It's better now that we've cleared out
I'm
some
better.
inventory lower. You know what I mean? I always like to get in after I've seen some pain.
I do like
Scaled out.
you guys are very good at buying that exact low.
Are you talking about the chat?
No, you and the order flow guys,
Oh,
like you guys see stuff on the tape where you're buying that low really well or that high, while I wait for. I'm still looking at that
price
low, but
action
I'm
patterns.
waiting for
Yeah.
the price action to sort of trigger for me.
Yeah, you probably have a higher win percent than us, though. We're always taking paper cuts. I say we. I don't like identify. I don't trade the same way that the
Yeah, but yeah,
OFL
I get what
guys
you
do.
mean. ES hit that weekly open as soon as you bought that too.
Oh,
All right, can we see a failed breakdown and reversal here? Looks like we were gaining it. That was a good one, NES. Back up.
thank you. Yeah.
All right, so NQ tested that Pride Day low a little bit above it, and now see if we can bounce back up and then reclaim 800.
chat, do me a favor, smash that like button if you appreciate what we're doing here. 1,100 watching. Let's at least get the likes to half of you. 600 likes, 550 likes. Just a little click to show your support.
Yeah, we need 500. We can get there for sure.
Yeah.
Now we have news in a minute.
Mm-hmm. I'm going to scale out again to just protect in front of the news. I feel comfortable holding.
So this
one
triggered
lot
already.
into this thing.
Looks like it's gonna go without me. No entry for me here. Let's see what happens. So far, a failed breakdown. And in Q, ES is leading. I mean, you can see if it takes you to 6, 7, 18.
We've taken out the initial stops in the S&P, but there are more stops going to be looming above the overnight high, which was a major ledge from yesterday's profile. If you look at the TPO or like a volume profile, you'll see this ledge right here. Look at how many swing highs there were. So that's going to be an area that's really vulnerable. Yeah, see this little thing on the profile right here? Little notch. So this is a good showcase of a time where, value area is decent. It's not horrible to use value, but in reality, there was a bit of a major balance in this region. And then there was a small balance in this region. That's really kind of the way to look at it a little bit more granularly when you have kind of two distributions on a profile. I could easily just exit this trade right here and be good with it. I'm going to make sellers make me get out of this trade, though.
Solid. Struggling here at 800 for a bit, but it looks like we might get through that. ES can go up to that 67.18.
Morning, Nick.
No trade for me here. This would have been my entry here. What is it at? It's not even at 1R yet. So if we do hold and reclaim 18, then I'll be looking for my continuation setup up here, which is that wedging structure. It'll mean that we form acceptance on a 2-minute time frame of 800, and then see if we can push up higher into that scenario 1, which is 8. Well, first area of resistance is 850s, so it's overnight highs, and then maybe 870s. But so far, everything's doing what you wanted to do if you bought that new low. Solid. NVIDIA is pushing out. Let's see.
My 4-year-old made a drawing for us. He said, "Dad, this is what you look like every day or on Tuesdays after your NinjaTrader stream." This is what you look like, Dad, after the stream. A little beat up, a little banged up.
All right, so let's see what we can build up here now that we're into 800. We can wedge up, then there can be an additional opportunity for me to look for higher prices.
Right now, the market telling me we don't have the energy. We don't like it higher. We are comfortable staying back inside the range.
Yeah.
That's the message I'm hearing right now.
You're the price whisperer.
462 likes. That is 38 away from our target. Just need 38 of you
Hey, Nick.
kind people to bang that little thumbs up. $38 más.
All right, so we rejected once again at 800. We really need acceptance there in order to push out higher. If not, then back down we go, and it's more vulnerable to the downside. Well, I think we hit 500. Okay,
Boom.
who unliked it? Who removed their like?
No, you know what happens is people try to hit it again and they take it away. I've done that before. You can only do one. If you click it twice, we get 0 likes. Did my voice just crack?
Show yourself.
0 likes. Thank you guys. We do appreciate it. Appreciate the
1,000
love.
now.
1,000 again.
All right, so NQs is in this little micro range, nothing much happening.
Bring in the bots. Austin Powers.
Yeah,
A little
classic.
throwback.
Classic.
Remember when they were trying to kill Will Ferrell down in the little basement and they couldn't kill him? He was like, I'm injured very badly. Can someone please?
Those were classic.
Oh, man.
We need comedy like that again.
I agree. The bathroom stall scene where the guy's trying to choke him. Oh, man. Yeah, we have a chop fest day in indices once again. Does this work? Does this show? Yes, it does. Okay, cool. That's good to know. I wasn't sure if you guys were sharing a portion of my screen or just a window. Look at what's happened. Look at where we are. If you want just like a one-day context, there it is. The biggest balance, we're just gyrating around inside of it. We talked about this last week on stream. I've made 2 subpar decisions today, or lack of decisions. Lack of decision is a decision. Number 1, I was supposed to scale again in gold, and then I started talking about cake fashion nugget, and I missed the scale. Number 2, little armchair quarterbacking, little hindsight here, but I do wish I just would have taken the trade off, like I said in the S&P. When we were up here, I was like, I could just take it off here. I'm just kind of like rolling the dice, whatever, with a
Whatever.
small, yeah. And that's not a great way to trade. Whatever is not a great way to trade. Not my favorite days, month end, quarter end. So I'm supposed to kind of take more base hits today, and I got like, let's just let this thing roll. And that's not really wasn't really my game plan today. So
Yeah.
not a huge mistake, but I'm just thinking out loud here for you guys at home.
It's good to think about those things in real time.
Yeah, journaling. I mean, is you know the very first interview that I was ever done, that I was ever a part of. The guy asked me what was my number one tool to recommend to traders trying to make the turn, and I said a pen and a notebook. That's the number one tool.
And they say you're hired.
Yeah.
My answer would have been make more money.
Suck less. Get good, kid.
This range bound, sort of has like a megaphone here on the 5-minute.
I don't see the expansion to the downside.
Yeah, it's just
Oh,
plain
yeah, I guess
pondering.
okay. Yeah. I see that. Yeah.
No much movement. Just a little bit of a mixed market. You have large caps breaking down. You have semiconductors strong, Nvidia at all-time highs. Then you have Amazon being destroyed. Just divergence everywhere.
Yeah, baby asks Merritt, what was the most advanced piece of tech you had access to when you were a kid? So I'm gonna say kid, like pre like 13, 14 years old. Advanced tech. I had some walkie-talkies. I had a remote control car that could flip. It was red on one side and blue on the other side, and the tires were so big that it could flip either side. I remember that thing. There was handheld games like, was that thing called a Sega Genesis or something? I didn't have one. A friend of mine had one. Yeah, you really want to know what I did when I was a kid? I would take a hatchet and some rope and my Red Ryder BB gun, and I would go out in the woods, miles away from my home. And as a parent now, it's like, wow, that's
I know, pretty crazy what we were able to do, and
yeah.
Now it's what a change in the world.
Yeah. We actually lost my 4-year-old. We went to a Friday night high school football game recently, and we lost him for at least 15 minutes, which feels like an eternity. And I was telling my wife, I was like, we're doing the freaking air tag in his shoe or like whatever, like we're not doing that again.
All right, so not a whole lot of nothing. We are failing to reclaim 800 in NQ. ES didn't really make it to 67.18. We're not breaking down either.
Thank goodness we're not still short gold. Great call.
What's it at?
Way up.
Yeah. It's higher. So let's see if we can, there's really nothing much here. We need acceptance of this micro range up here on the 800 to give us a sustainable move higher, or down here to then give us a breakdown. Inside of here is just some scalping, mean reversion if you are that type of trader.
Nautilus, I mean, it's just too order flow is one of the most difficult pieces of the NADRO methodology, or perhaps any methodology that uses it to master. Order flow is just it's even difficult to teach in hindsight. It's something that you need to experience hard right edge reps to really get. In general, the elevator pitch I would give you is that I look to fade weakness and go with strength, almost like price action, right? Like I'm looking for the side that I'm intending to trade on based on a contextual bias or whatever. I'm looking for there to be support for that, right? Strength, aggressiveness flowing with that, as Trader on the Brink is saying. And then, and there's the opposite side. It's like, how strong is the other side of the tape? And then, you get into a million things, very, very nitty gritty. Where's there a little absorption, capitulation? How is it thick? Is it thin relative to what's normal? Just is it quick? Is it slow? Speed of tape type of things. There is just way too much for us to cover in this format here. But if you want to learn everything that I know about order flow, you can check out my scalping course at apterostrading.com.
All right, so I took a
One thing to
long.
point out here is those students of mine who are in the chat, you will know what is the stop management for a rotational play like this. And the answer is the stop doesn't freaking move. It doesn't move. It doesn't make sense to put our stop in the danger zone in a situation like this. And if this trade's going to work out bigly here, it's only because I let the randomness in a chop zone play out. I kept my stop where it was.
Yep.
And that's something that a lot of traders struggle to do. They see a big rotation. They see it coming, roaring back at us like that trade was coming. It came within a couple ticks of my stop. It's a big deal. In a trending environment, yes, trail stops, play the momentum, all those kind of things. You banged in here too, Chris?
Yeah. I want to see if we can push up. If not, I'll close this. I don't want to stay in this range. We had an internal reversal inside this range when we reclaimed this lower high here for my process, and so that gave me the trigger for a push back up. And so now I want to see continuation higher to challenge that 800, 80, 808, 810 area again, and see if this time we can push out.
What musician do you think of when you hear the term 808?
I would say Kanye,
Kanye?
because of that song. I mean, That song
I
was
feel,
popular back in the day.
yeah, I feel like it's. Am I crazy or was that Luda that did that? Dun, 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 808, can you feel that BASS bass? Who was that?
Outcast.
Outcast.
Yes,
That's who
yes.
that
I would say
was.
Outcast definitely.
Okay.
Most recent for me was Kanye, but I
Yeah.
mean that's Outcast is
The
amazing
the
group.
808 is like a synthetic bass instrument, right? That's what it is, I think. That was like the name of it. I flattened out of S&P. I did what I said I was going to do the first time. We got up into the upper end of today's range. We found some sellers, and I came out just like I was lamenting not doing before there. I don't care if we rip 1,000 points higher from here. That's my process for today, and I did a better job given the opportunity here, given what we talked about pre-market.
Awesome. I closed mine at break even, and I'm just gonna wait for this range to see if we can break.
Yes, that's from I Like the Way You Move. What a great song. Bum, bum, bum.
We're wedging up now in NQ here, so that's good. Creating energy for a move. Let's see what we can get.
I'm not gonna lie, that's probably gonna be it for my day today. Squeaked out a little bit in gold, squeaked out a little bit in the S&P. Not my favorite day. There's not a lot of times. I think trader, I step on a lot of toes with some of the things that I say, but I just have some opinions that I'm happy to share and happy to be wrong about as always. But anyways, I feel like, and I feel like I read this in Tendler's book. I'm still going through his book, The Mental Game of Trading. It's fantastic. I can't recommend it enough. It's still right here on my desk. I believe he mentions this in the book, but forgive me if I'm wrong about that. But anyways, my opinion is traders who consistently like walk away, like that's a thing, like where you get a little bit of green and you're like, I'm walking it away. It's like you're at a casino where they have the edge and you don't, and you're afraid of the likelihood of giving it back. You know what I mean? Like if you get good enough at trading, the mentality should be, outside of exceptions like I'm in today here because of what day it is and the situation and the amount of lack of opportunity present. It's almost like a gambler's mentality to say, oh, I'm just walking away. Like I feel like the ideal trader mentality around that concept should be, is there opportunity for my process, my methodology? If so, I'm supposed to swing. I'm supposed to put risk on. If not, I'm supposed to do nothing, right? And if conditions are so bad, then by all means walk away. If you've run out of risk for the day, by all means walk away. But if conditions are banging and things are flying around and things are firing off for you, I think it's your job as the highest level trader. I think it's your job to keep putting risk on. That's my
Yep.
take. And someone in the chat said, where was it? Yeah, set a reasonable daily goal and walk away. I really disagree. You know, we can have different opinions on these things, of course. I think that brings about a massive
potential for frustration and potential for negative behavior for people who set a daily profit goal. If you're doing that, your goal is to make money. Your goal is to make that amount of money for the session so that you can win. And then anything that happens that takes you away from that goal is going to frustrate you. It's going to remove you from objectivity. It's going to have you getting into potential revenge type mode, getting triggered, going towards tilt, all of those things. It's because your expectations, your wants, as Tendler talks about in the book, your wish list. It's a bad wish list. I really firmly believe that. There are days where you can make a ton of money, and you should make a ton of money if you execute well for your process.
Yep.
There are days where there's almost no opportunity, or even a small losing day is ideal for your process and your methodology. Battling for a daily profit objective that you've decided, you've said how much you want to make and you've divided it by 250. That's toxic. That's not good. And I'll die on that hill.
I agree.
You're setting yourself up for failure. You're setting yourself up for frustration. Tendler's book is called The Mental Game of Trading.
So if you own a business, why would you close the doors in your busy season?
Exactly. Unless you were so psycho that you, a lot of times when things got busy, you decided to light the cash registers on fire. And you're like, we're going to shut the doors because I might light the cash registers on fire. Well, you probably should address that issue of lighting your cash register on fire. Thoughts on stepping away during certain times of the day? Job, great question. A lot of the taking a break, whether it's triggers, right? Something you've identified that is problematic. You're starting to feel not at your peak performance. Something's wrong. By all means, breaks are, as Dr. Steenbarger likes to say, investing in your trading. They are investing in yourself to come back and be better than you would have if you just sat there and tried to sweep something under the rug. Another reason, Job, as I'm sure you're aware, is severe time of day underperformance. So if you absolutely look at your stats and over the past 6 months, you're just hemorrhaging P&L from during the lunch hour, well, then guess what? You need to work out during lunch. You need to go for a jog. You need to do something fun that you love doing. Go to the driving range for half an hour. Go have a nice lunch and get some fresh air. Exactly. Fish, work out. Yeah, this is really important. And it brings up the concept of knowing those data points about your trading, right?
Yeah. One important thing that you brought up that others can benefit from is that when you say you have to consider as your job to continue to execute in that day or environment that you thrive in, like it is your job. You should look at it like that, not this is where it interferes with the whole I made my money, I'm calling it a day because I hit my profit goal. Look, if you're in an environment where you do really well and your win rate's higher, the growth that you capture is higher, why would you limit your performance by stopping out because you've hit your goal? Like that is, yeah, it just makes no sense to me. You need to, it is your job. You need to execute, show up and continue performing because there's going to be periods where you don't. And that additional growth, capped your drawdown. It kept your mental or emotional bank account filled up. So you should see it that way, and I've found that many don't.
Yeah, and I do think that it's potentially a upper echelon trader thing. That's like the person who needs to hear that most. beginners are by design they're going to deplete their mental and emotional capital sooner. They're going to be less aware of their own triggers and problems and patterns and things like that. They don't have good data, or they haven't been
Yeah.
trading consistently enough for the data to even make sense. They're losing money across every half-hour time period of the day, so there's not a good one to take a break. You've got to get to a certain point in your trading where this conversation that we're having makes more sense.
Yeah.
And that's always important to keep in mind as we have some of these conversations. Biggest drawdown I've had in years was after my first kid was born. I was sleep deprived and feeling this new sense of like taking care of that new human and all those kind of things. And I put all this pressure on my trading, and I was not rested, and I was not doing well. And yeah, so the question in the chat around stuff going on in your personal life, you got to factor that in. Guys, you can't just prep in the morning with charts. You have to prep yourself as well. If you're too tired, if you're too sick, if you're in a big fight with your spouse, or like whatever it is, right? Like you got to know, hey, I don't need to get behind the wheel today, right? You got to do that. It will pad your bottom line of your equity curve. What's gold doing? What a rip. All the way across DVA.
All right, so we're getting a potential breakout here. We'll see if I can get filled. I don't want to chase. Currently breaking that wedge we were forming. We'll see if there's a 2-minute 90-MA higher high, higher low here for me to look for a long if we set up, and then see for a push higher. There's something else you said on time, like you and Job said on time. I found for myself that in the first 2, maybe 3 hours, that's where I do the very best. So if you find a time frame where you do, that's like your highest performing hours, then why not focus 100% on that to make the most, and then step away, but based, on a time window, not on the money that you made. Because after that, I'm a trend follower. So if my job is to try and capture a trend in that first 2 hours and then ride it for the rest of the day. If it doesn't happen then at that point, it may be chop. And what trend are we going to get out of that? All right, so we're getting a pullback here. I want to see if this higher low forms here. If we are able to hold after this test to 808, 810, and then start to bounce, I'll put on a long here and try and capture the move away from here. And then my stop will be below the most recent higher low. So ideally, we're starting a new 9 MA uptrend on the 2-minute. The idea is that this is the first higher high, higher low. And if we are to continue higher, we are to see higher highs. So I want to enter when that higher low is formed, have my stop be below the higher low and capture that potential trend higher. If not, this is most likely going to be a failed breakout of the recent wedge that we put in, and then we'll just continue the range and go back down. NVIDIA is so strong. I love it.
So you call it NVIDIA too. That's what I've always called it.
Is
I
it
heard
not
someone say the other day, NVIDIA.
NVIDIA?
NVIDIA. Which is it?
NVIDIA.
NVIDIA.
No,
That's what I
starts with
thought.
an N.
NVIDIA. I'm not gonna say who I heard calling it. I'm not calling any names out. I say N versus N. NVIDIA. Divergence.
Another question for you, since I get asked this. I have my own answer, but what is do you consider morning preps, of course, trade plan creation or something like that, of course, but outside of that, do you consider any morning prep as part of your success to have a successful trading career?
What's the question exactly? What do I like? What else would I consider like super critical in terms of morning prep for a good
Sure,
career?
yeah. Or what do you currently do that helps you?
I think that you don't have to overcomplicate it. I'll give you a hot take. I think that some people get way too deep on the whole, and I think a lot of this comes from like social media. The like just, how should I put it? Going off the reservation, off the deep end with some of this like prep stuff, okay? Like, you know, like if you're saying, look, I wake up at 3:30 a.m., ice bath, then pure protein smoothie, and then I give myself lashes on the back, and repeat my mantras, and then back in the ice bath, and then I have to run 30 miles, and then like, okay, guys, like let's calm down a little bit here, that type of thing. That's my take on some of the self-prep stuff out there. But on the other end, you don't just wake up in your boxer briefs and roll up, pull out your phone and start tossing on trades. That's also not good, okay? I believe somewhere somewhere in between those two, and it's going to differ for person to person. I think if you're doing a good job of staying healthy, right? Basic like nutrition, basic hydration, basic physical fitness. If you're staying healthy and you are doing some quality version of preparing yourself, aware of your goals, aware of your process, aware of your underconfidence or overconfidence, aware of if you're too emotionally upset to trade that day, those type things. And then you do a good quality market prep to identify the opportunity at hand. If you take care of those things, you're going to be ahead of the crowd. You're going to be in a good position to come in and be your best, right? And your best is going to ebb and flow, and your best is going to evolve over time. but hopefully you're kind of getting 1% better each day, something like that, 0.5% better each day. And that comes down to like process goals, focusing on things, and that's part of your pre-market prep. Instead of defining winning for the day as that P&L profit target that so many of you love to do, define winning that session with something that's within your control, actually. Define winning the day as coming in and trying to do something well that you can achieve and can control. And if you do that, you feel good about your session, regardless of where the P&L fell. If you take care of those things in terms of prep for the day, I think you're going to be in a really good place.
All right, so this wedge breakout failed, and it's back into the range. ES made a new low. So maybe now NQ is ready to see some follow through lower.
To me, it's still a probe, right? I mean, this is a perfect dovetail off of our prior conversation, right? Where do we read the acceptance if you're taking into consideration the range we've been in since yesterday afternoon, right? Where might that acceptance trigger? And for me right now, certainly not yet. So that might be a fun case study here in the last 20 minutes of our stream if we start to continue to give reads on where's that acceptance relative to that balance. Funny thing about NQ is on September 18th, up until we broke out of it on September 22nd, there's a little balance area that formed. We broke above it, failed, broke below it, failed, and then today is just perfectly balancing inside that. So that's kind of what's happened over the past couple of weeks here.
What is that level for you? Like 730s, 740s?
It is 726 up to 815.
Yeah. I've been calling that like 760s, 770s.
Yeah. Yep.
Yeah, I'd see it probably 740s to 760s for sure. I call that I don't know if you'd see it the same, but the bull bear zone of like the range we're in. If we can hold above, then we can explore higher. If we get below that and form acceptance, then we explore lower.
Yeah, I've got quite a bit of even confluence from other time frame references around that 780. So I think it's a great line in the sand. Today, not giving clarity on that, right? Just above and below chop fest.
NQ flat the whole morning. I think that'll be 4 weeks of just chop for Tuesdays. What's oil doing?
Crude.
Back down.
I like the trade location long for crude. I do think that it is vulnerable to running stops below this, 1, 2, 3, 4, 5, lows that we've put in since June in crude. I think we're vulnerable to stop run below that area. So that's something to keep in mind. But barring that, this is yearly prior value low in crude. This is quarterly developing value low in crude. This is monthly development value low and prior value low in crude. The weekly is dissonant. The weekly has held, and I've got, if you notice, crude is up on one of my chart books here. Last week's value low is 62.80. So if we look at what crude has done during the pit session today, it's accepted below 62.80, retested it, and is working lower from there. So 62.80 is key. And we could look at the weekly chart as well. I think, yeah, we're showing my screen. So right here, you see this little, where this level ended, 62.80. That's the highs today right there. So if crude either one, run stops below 61 even, okay, way lower, $1.30 lower than here, or restabilizes above 62.80s, those are two bull thesis for crude. And there you go with the S&P. It's just a probe. It's just continuing to do what it's been doing, running stops below prior swing points. The algo fires off for us right there, nice and clean. Look at her go. Yeah, in a rotational market, you'll see this little algo of mine just print money. In a trending environment, you will see it say, top, no, that's wrong. Top, no, that's wrong. Top, no, that's wrong.
Oh, might be ready to break here. Strong.
Just more of the same, man. Nothing's different. Would I participate in the stop run lower in crude? No. I would just look for it, look for the reaction. John, I definitely got better during my time at S&B. I felt like I certainly knew some things coming in, but no. How if you could spend 5 years on a physical desk, surrounded by successful prop traders, and walk away from that environment and say that, nah, I already knew it all before I got there, then you have a very big problem. In an environment where everyone is focused on getting better every single day, you get better. That's one of the most interesting and beautiful things about humans. If you truly focus day in and day out and apply energy and effort towards something consistently, you will get better at it. It's incredible. It's awesome. Doesn't mean you'll make it as a trader, but you can get better. Van, this TPO indicator is a prototype that we are building. It's not publicly available yet, but it will definitely be something that we polish up and get it correct so that we can offer it and release it.
All right, so there it is, getting that breakout. If we can get a pullback, create a higher low, then look for an entry.
Yeah, this is the speed of the tape is picking up big time.
Yes, just wanted to come down and make a new low, stop everybody out.
Yeah.
So let's see if we can form some structure up here for me to consider a trade. As we can now, a hold of 800 can take us back to 870s. We really haven't gone anywhere. If I share the trade plan from this morning, scenario one was for us to pull back into 760s, maybe prior day low. We did that. It's been choppy, range bound, and Scenario one would have a move up into 870s. We do need to reclaim that 850s overnight resistance, but we're still living in that same morning scenario. If we can then hold 860s, 870s, and we can push up to prior day high. If not, maybe back in the range again. And maybe later in the day we break out or down. But there's momentum right now to this break that we're getting. So let's see if we can form some structure here to engage in. Yeah, this broke for sure. Takeaway, just have to see if there's follow through, if we can hold this breakout, create a higher low, and then see higher. Or maybe the momentum from this break just pushes it straight up and doesn't really allow for a entry after the breakout.
Alan, no. You can go back and watch the recording. I don't know if you knew that. You can scroll back through time, even forward in time. It's incredible. On this stream, and you can go look at where I flattened out of S&P.
There's a little icon there that says no position. We have a position tracker for everybody to see.
Right.
Holding.
Gabrielle, no, I do not. Have you ever looked at that stuff, Chris? The options info, like Gex and Gamma and
Never.
Vanna and Charm and all that good stuff?
No. Just old school. I'd rather look at price action. I'm sure it's helpful. What I was never a fan of is the you know how they would share these trades. Apple $250,000 call
Oh yeah,
purchase.
the unusual options activity.
Yeah,
Yeah.
but $250,000 is nothing. You have to think of like the size that people are, not people, but like institutions and these trading, they're calling them whales. Even $1 million option trade it can be a rounding error for a fund.
Yeah, and what's a hedge, right? Versus an actual, like, I'm putting my bet down type of position, right? We don't know. What is a dealer hedge? Even not an outright participant hedge, right? I'm totally with you on that. I do the one place where I think there lots of different ways to wash a cat. Do cats enjoy being washed? I can't imagine that cats like that. The one place, Chris, where I feel like there could be some unusual activity that could be, and I'm just spitballing here, beneficial would be in like super low float names where all of a sudden that level of activity for those names, it's like, hey, big player playing in this name, whereas before that was not a thing. To me, that makes sense.
So this reversal from down here still was alive. If somebody's in that reversal, you're at 1.5 R or so. Just keep trailing that. So far, there's no pullback here for a potential higher low for me to participate in. So I don't think I'll get a chance here on the stream.
I will say for those of you at home, I love to point this out when I can, not to pat ourselves on the back, but to truly try to help you and try to teach you. Take a look at the activity level from Chris, from myself, what we've done here today, given what the market has given us, or not given us in this case. You've seen me take a couple little base hits. I was positioned for a bigger move in gold. I didn't get it, but I took some preemptive scales, made a little bit. I essentially took the day's range out of the S&P with just, a little nothing type trade. Chris has been surgical with a couple of places where he's put risk on, and we've done a lot of nothing, right? That's just, I can't express how important that is for you guys to see. It's easy to just like watch us and then not really take note of the lack of activity versus times where you've seen me just gunslinging, right? And just trading, adding, doing all kinds of stuff. It's important for you guys to recognize conditions and how we're matching up levels of activity or inactivity. No selling on the tape yet up from these highs in the S&P, unlike what we've seen previously. Previously, we've seen sellers step in, start to slam bids. Right here, we're not seeing that. And, if I had to bet, we're going to see a little stop run higher within the next 10 seconds here in the S&P.
Yeah. I mean, here's the move. There's really, we're now going to 870s. So scenario 1 is playing out here, with just a lot of chop in the morning.
Sure.
Here's overnight resistance and NQ. Fine, maybe slow down up here. If you caught that, fantastic.
Mm-hmm. I jinxed that. All of a sudden, the sellers piled in after they made that little effort in the S&P. Not a ton, though. The sellers are still kind of weak.
Morning, y'all.
Yo, morning.
Yo.
Oh, got the Bass Pro Shops hat on?
Oh yeah, today's a Bass Pro kind of day.
I
was looking
love
at the
it,
hats. I was
man.
like, what are we gonna wear?
I love going in a Bass Pro.
I only go there for one thing. The loud section, right, chat? What's up, chat? Good morning, good morning. You guys dealing with balance all day, huh?
Yeah.
Yeah, tradable though, I mean, either if you're deploying a mean reversion type of deal, like and you understand where the balance is, hard to miss, right? If that's the strategy you're deploying. If you're looking for breakouts, if you're looking for trends, then obviously you're gonna be struggle bussing.
Yeah, I thought it would go lower. I got the last short at 805s NQ went down to the POC and then this value area low, overnight low. Held on to 2, and then it just ripped back into my entry. I thought it would go lower. I was following ES. ES
But
looked
still, I mean, 805s was the perfect trade location to try that idea. So
yeah, I had to leg into that one slowly. I got lucky
okay.
on that. On that average. It was a really good average, but
Yeah, absolutely.
yeah, I got dicey there. But we had, I think it was like 50 points or something, which compared to the day's range is really nice.
Right.
But I really did at that point I was like, yeah, this thing is it's gonna follow ES. We're gonna wash lower, and then it just reversal.
Welcome to month and quarter end. Thanks for playing.
Yeah, you guys watching you guys are watching for longs. I know Chris, you're looking for a higher low, right?
Yeah, we can form some structure up here, then I think we can see higher, but it's just a waiting game for me now to see if we do get that.
Yeah, I'm looking for potential reversion, but not
Back
with this
down
tape.
at this
Yeah.
overnight high. That's a good area.
Because I
This
think if I were to get
350s.
long, it's got to be off of a pullback, pretty like a lower pullback, but I can't get long up here personally.
Something closer to that 805s that like pulls back. It looks super
Yeah.
weak. The sellers are just
Yeah,
struggling to do anything. Yeah, I could see that.
Yeah, I'm gonna
that's what I'm looking
see what
for.
happens.
But we'll
Cool.
see.
I think that's going to be it from me today. As I was saying pre-market, it's just, month end, quarter end are not my favorite days, and so I took a couple base hits, and I'll probably focus on other work for the rest of the day.
Cool. I'll see you guys.
Same.
Yeah. Good luck,
Good
dude.
luck.
Chris,
Thank
enjoyed
you.
it as
Thank you.
always. Chat. Appreciate y'all. Great questions. Love it. Love it. Love it. We'll see y'all
Yeah.
soon.
Chat, take care. Later, Merritt, XY.
See you,
Go
man.
like
See you,
this
Chris.
sesh.
Looks like they still want to go up. Some herders. Build back broker. I see you, man. Good morning, chat. Good morning. Good morning. We are coming off a very nice trade, so I'm not really itching to take any others unless something decent presents, but this short was super nice here. This was my short after the IB closed. I thought I was gonna sit in like 150 point short, honestly. But information has changed, so I'll break down what I'm seeing now. Earlier, short because, well, balance. ES looked weaker at the time, so I followed that direction. Got a nice value area high, upper edge of the range short. Got down to value area low, wanted to break a new low and then hold for some more. But now that we've broken higher, it's not that we've traded higher, it's also that we've built this and we've tested a pullback. So on the move up, we did have an imbalanced range. They did trade back into it and they held it. So that is definitely a sign of strength for me. Higher time frame, this is what I was noting before. We did come back to this spot, rejected it here, and we're working with, at the time before they built higher, it's a failed attempt and then trading under a main distribution. So to me, that was not very bullish. But they did hold what, like a fourth attempt? 1, 2, 3, 4 attempts overnight low. So they had a sweep, they put it in a higher low, and they get back to the higher low and they fail it. To me, the information now is, well, the market has said we don't really want to trade lower from here. So I'm gonna go ahead and listen to that. Let's see if we can get some trades. As of right now, it's too high for longs. It's a possible, this is a swing high time frame, so it's possible that they can reject this. Let's see, we are about 30 points, 40 points from the 9. So it could retrace. I think I'd be more comfortable seeing them leave this, trade into the low 40s, maybe the 30s, and reoffer the 50s. So I'll be waiting for that. Good morning. Good morning. Daniel, good morning. Hope, yeah, had a chill weekend. Shraven was in the same short round trip the last few. Yeah, I mean, round tripping is not too bad if you're taking profits. If you're in the same short over and over, I mean, that's 4 times, 3 to 4 times you've gotten paid. It's all good. I had 8 lots on, so I took 3 at POC and I took 3 more at the overnight low, and that's 50 points in already. So the 2 lots that they came and got, it's not that painful. When there's volume done at the ask, the indicators of aggressive buyers. Yes. Volume done at the ask will have uh, blue color on this delta profile. And on the tape reader, the candles are basic red blue. These are not based off of delta order flow or anything like that. When are we getting playbook? The playbook is done. We are trying to figure stuff out on the website. I think the website's giving them trouble right now, so they gotta figure stuff out. I have that done. I have a recap video done. Based off of Friday's low of day. So there is a recap video for that. Yeah, so as soon as we can fix some things on the website, it will be published. I'll probably make more content this week as well. So a whole playbook, a breakdown video of Friday's low of day, and maybe something else this week. So that's there. It's done. Just gotta figure out some website stuff. On a typical day, how many executions do I have? Man, that's really hard. I mean, you guys see it here. Sometimes I've taken 1 trade, sometimes I've taken none, sometimes I've taken 3. Uh, the last FOMC a few weeks ago, I had like 8 trades in the afternoon show. Really depends on what opportunities the market's giving. I think I'm willing to take this. I don't like this fill too much. I'm gonna start with 3. We'll go up to 5. Yeah, execution wise, it really depends. But I think if I weren't streaming on a normal basis, that short in the morning would have been good enough for me for the entire day. It's a good trade, good profits, and I do like to get a nice one and done for sure. But we'll continue to look for some opportunities here. So I'm not giving this too much of a leash. It's not exactly the fill I would want. So just 5 lots right now, and if it starts to really turn against me, the order flow, I'm actually just gonna flatten this thing. It's not gonna get to my stop. We're seeing a lot of buying here, and I'm hoping that they go underwater. And if they do, then we probably have a pretty good move. So keeping a close eye right now. Still getting some sell. I'm gonna scratch that for now and see what they do. So there's a bid that's popping up right now. I want to see them step off and I'll be willing to get back in. If not, this thing can just continue to go. So the reason I am interested in the shorts here is 2 attempts up there have just failed. A pullback is not out of reason, but super short leash on these attempts. If I get in, it's got to go. If it's not going, I'm out. So it's like what Pax would say, right in, right out. Still watching this. There's a big batch of selling down there in the 44, 43s, which is not good for sell side. So. ES just took in a bunch of selling too. Let's see. Trump starting to speak soon. I don't really look at YM or Dow. Just ESNQ personally. Legging into the shorts again. Again, tight leash. This thing goes, or I'm going to scratch this thing out quick. So close eye on these 43s, 44s. That's where they just keep flooding in with a bid. They fail us again. I scratch it. If they can push them underwater, then we're probably going to take off. So looking to take off some profits now. Going to take 2 off, looking for 2 more at the IB high right here. And we're going to run with the 2. So kind of seeing this as having runners back on from my earlier short. Paid for the trade. We'll see where these go. I like to see the 12s revisited. So the reason I'm scaling out 2/3 at IB high is I think this can definitely be the hold. If the market holds the IB high and everyone begins to agree, hey, look, we're not trading into the IB anymore, I think we're just going to continue going up, honestly. That's going to be a key decision for the market, in my view. We got edge alert, lumber futures. Did anyone trade lumber here? What percentage of T2 targets are typically reached? Seems, I would say it's really often if it's already reaching a TP1, but I don't know if it's as good of a stat as you're thinking when it comes to my trading, because as you can see, I took profit at 2 spots, right? I took some at prior day close down here, and then I took more just 8 points down, 8, 9 points down, further from that. To me, it's just based on areas that we're heading into where the market has a reaction. So right now, honestly, I'm just stat padding. I have P&L that I'm happy with from the first trade. This one, I'm trying to, because it is counter trend as well. I'm trying to pay for it quicker and then get profits from it and then hold on to a piece of it for the original idea of lower. So To me, that idea still won't come into play until we trade back into value, back into the main distribution. So at any price up here, they could hold higher and just continue grinding up. But I have two. I'm going to do one where I think a key decision will be made, which is 8/12. And then if that trades, we're going to hold on to the last one. In my view, the move up was, I wouldn't say it was really dicey, but it was prone to a retracement. It's just that, hey, that's what I think right now, and the market hasn't given really any indication that they agree yet. So after two attempts and they failed to go higher, I started to eyeball for some weakness and finally got some. Scratched out that first one, and then I got back in the shorts. So yes, I would not have stopped out of the first short, but that's not really how I do things. I am very much looking to follow the idea. So when I got into it, I started legging into it and it's going, it's in my favor. It's this needs to work now. And if they hold the 44, 43s again, I don't want to be in this trade. This is a different trade than what I had planned for. I'm going to get right out, whether it's small green or small red, a scratch. I don't want it anymore. Just to stay objective, you stay flat. I'm looking at it, and then still they're struggling to make any highs, and the buying that popped the price back up is starting to fizzle out. Selling comes back in, I'll come back in with that selling. If that selling fizzles out, like I said at the 44s, I'm getting right out, but it never did. They sustained the selling, drove it lower. You start to scale, and then I am looking to move the cover if they start to stall. Tape is still really good here. All right, I'm covering that. So we are down to one. So I have two choices to make. Either I can cover the one, call it good, book the profits in case they come back, or I hold the one in case they actually lose this upper range and go back into the old range. I'm going to make a decision to make peace with it now. I see that ES is back in its main distribution and going back to very low. So I'm going to go ahead and just hold this thing. So yes, it can definitely come back, get me, but I've asked myself what hurts more, this coming back and break even from here, or I take this for what, 30 points, 25, 30 points, and it just runs down and follows ES. So I think it would hurt more if I'm out of it. I gave up this access up here, very comfortable access, and missed out on the move that ES is doing via NQ. So going with the one that hurts less, or I'm eliminating the factor that hurts more. What is the indicator to see buy or sell operations like this and have the stop loss and TV? It's built in. Felipe, it's the ATM like strategy thing. You can set your brackets. Do I use NinjaTrader? Oh, he's talking to, yeah, I am. I appreciate you helping him out for me. Way too sloppy for your blood. Um, it's not too bad. As someone who really does hate balanced ranges, it's not too bad because when they move a direction, they definitely move there. So if you look at it, it's not the worst. It's like down, up, the down, up. It consolidates a little super choppy here, but when it pushed up here, it went straight and then it goes straight. It's not the worst. The range is a little lacking. Yes, but So I am keeping an eye here on ES. This is value area low in confluence with NQ's retest of the break of the range, VWAP. There's a lot of things. ES is lacking sell now. So ES under the O2s needs to find real selling. They're not exactly doing so. Nope, what happened to my NinjaTrader? I'm gonna trail this now. Either they really flush this with ES or it's gonna be probably a pretty strong pullback. Don't want to sit through it. So something to note is I'm making the choices very deliberately and resigning any idea of control or an opinion to the market entirely. It's not my game, it's theirs. And the simple way I'm doing it is, hey, what hurts more? Having it do this or having it do this? And I just go with the one that I prevent the one that hurts more. It's that simple. So yeah, right now, if I had flattened there and I took the money because I'm afraid it might have come back, it would be like, dude, what am I doing? Like over 25 points on a move that I got paid 5 out of 6 lots on already. It makes no sense. And now I'm missing out on this could come back and trail me out, sure, but I'm missing out on the opportunity to really follow this thing down. So we're 50 in. ES has found a decent bid. Sorry, I kind of want to keep an eye on this runner a little bit and see what they're doing with the order flow here. Smack dab in the middle of the day's range. ES is value low again. I think I'll give this more room. Okay, decision made. Would I consider making ES Dom video or two? Sure, yeah. I do use two DOMs, ES and NQ, a lot of the time, so maybe one day we'll do that. Let's see, look at 5-minute ES and tell me it's not too bad. Well, Jeff, one, it's your fault for trading ES. NQ has done me just fine, but really ES looked pretty similar to NQ. It's just you're dealing with ES's range and there's not much of it. But yes, ES, it does look horrendous. But at no point is it giving you false information with the volume profile. Well, I mean, you're not trading physically, but you're looking at ES. It's going to be hard. But in the grand scheme of things, ES's profile held more true than NQ's. NQ built, it ran and then built up higher. ES has stayed a reversion profile. So that should have been worth something for sure. Awesome short. Regret not taking it with you. Yeah, I mean, the short wasn't exactly that simple. So you can't really fault yourself on that. And it's a reversion. So all right, I'm gonna trail this lower. They've had many attempts, or they've had enough attempts to go higher. And if they go back, I'm not willing to stand in the way of that because they are also trying to work lower. And if they come back up, this could be a failed attempt to extend for now. But yeah, anyone trading ES or anyone looking at it like Jeff, I do feel quite bad for you. That's for sure. Value area is like 8 points. That's pretty rough. But do not take the profile for a lie. All right. Very nice lower to downside. Should have done micro instead. That way you can trim them better. Ticks. I don't know. I had 6 lots. If I had micros, what am I? I'm in 60 lots. I think that's kind of insane. Uh, what do you base your stop loss position on? Uh, that's tricky. So my stop loss is going to be based on whoever I think I'm trading against. So if I'm looking at order flow and up top there's uh buying, if I want to short, right? A buy attempt gets set off sides. I'm noting where that attempt was, and I'm going to speculate that the market doesn't, they don't get continuation. So above them should not be traded again. So I put the stop there, but if I am short and I'm seeing that they are not getting forward progress on the sell side, I'm going to scratch out. So that's something you saw earlier. I would not have gotten stopped out where my stop was if I had just held on to it. But at the time, I wanted it to work then and there. If it's not going to do so, especially as I'm reverting the market's going up and I'm looking to go down. I'm not going to give that much of a leash. If that down move that I'm thinking is going to happen now or very soon is not happening now or soon enough, it's not the same idea for me anymore. It's not the same trade. I'm not going to hold on to it just because my stop isn't hit yet. So that's one of those things that's highly discretionary. A lot of traders, professionals be like, what are you doing? Your trade is not invalidated. You need to stop touching it. That kind of stuff doesn't work for me. I hate a trade very fast. The more heat I'm taking and the longer I'm sitting in it, the worse it is for me mentally. So I have to safeguard against that. It's something that I outline in my playbook, in the mental section, that, I do a lot of things differently and I process things differently, and things can affect me much differently than the other trader. So there's a section where I'll say, hey, this is what works for me, but what works for me might be absolutely useless for the next trader, or it actually might hinder their ability to, trade at the highest level, at their highest level. So what I'm going to do is not fight this again, and I'm going to get flat at value area low and Q. ES is a new low here. So what's this, like a almost 80-point move maybe? I'm gonna cover this. So we're flat on that runner. Glad I held on to it. I very much doubt that I will be taking another trade. I caught a 50-point move and what, like a 80-point moves, 85-point move, and the market is ranging. I think it's foolish to expect anything more than that. Not that it's not possible, but I attribute a lot of my trading to being lucky as well. Because let's be honest, man, we don't control what the market's going to do or what it's looking to do. And in a scenario where I've got really good uh, access on my trades, I can't complain. I got over half the day's range on that. Yeah, so anyways, long-winded way about my stops. I can't sit in a trade that is not doing what I had planned for when I got into it. To me, I've done it all sorts of ways. I've held on to it, I flattened it, and every time it's like, hey, I cut my risk really fast. My trading over time, over a longer duration, is way better. The less I trade, it's way better. Um, if I'm in a trade and I'm more than like 10 points in heat, it's probably not going to end well. right? And it's just these small things are things I've noticed and I've journaled in the past. And then I'm just like, well, why even let it get that far then? Just get out of the trade. So a lot of times it'd be like, oh, it sucks because now you're sitting red. To me, it's in or out. It's risk on or risk off. There's no difference. Your stop loss and your TP, to me, it's not one is a loss and one is a win. It's both just the same thing and it's risk off. I'm only putting risk on or taking it off, and that's the way I'm framing everything. If I'm scratching, did I scratch green or did I scratch red? It doesn't matter. It just wasn't going to work. I got to get out. I'm going to get out. And then over time, you just stick to it. It's a great equity curve. Because you have to get into the areas where the market's going to make a choice, where the market's going to flip that coin. Then you get to flip the coin, except one side pays you a lot more than one side takes from you. You keep doing that. If you're on the right side of the move, then you'll be compensated. If you're on the wrong side, you just take your chips right off the table. What is the indicator name I have on the right? It's a OFL indicator. It's not free. It's a leg to leg delta profile. So you'd have to go to orderflowlabs.com. Luck is when prep opportunity come together. John, that is exactly it. So when I say honestly, a lot of my trading is luck. It's not that, hey, I just got lucky and I did something blind. It's that, hey, the market just happened to agree with me at certain points. That's all I'm looking to do. I think, location A, B, or C, the market's going to make a choice. So right here, one example is overnight low. It's going to make a choice. I am speculating, like I covered my runner here because, well, I think there's a higher chance that they get a good bounce from here, right? If I was flat, let's just say I'm getting into a long and it's this spot again, like how many times does the market need to tell us? Not only are they holding it, they actually did already attempt outside. There's no boogeyman. The market gave us that info with this failed move. There's no willing seller out here. And if that's the case, price literally cannot possibly continue lower. And if you get into that range and you still find a taper in the interest to sell, which we're seeing everywhere, it could be volume, it could be your order flow, it could be your footprint. There was no interest. And if again, there's no interest, what happens every time? It pops, it pops, it pops, it pops. So the example would be location A, up or down? I don't know. But I do know that I'm going to say risk 10 for 20, right? If the market agrees, which is me, the luck, you will get paid 20. If the market does not agree, you will lose 10. And you choose these spots to flip that coin. And I say it's luck because I had no control. It's not like my size was moving the market. It's not like my opinion had any bearing at all. The market really does not care what I think. But that's the luck component. So you get lucky enough, and to me, all the trades are luck. That's what I'm gonna say. All the trades that work, it's simply luck because the market happened to agree. I had no power over that. The only thing is where do you want to place your access, which is where you feel like you have the advantage. What is the advantage? The advantage is being able to risk a lot less than what you can make if the market agrees. That's it. Those simple parameters can frame an entire trade. Anyways, there's that TED Talk. I don't even know how I got there. Volume profile. I do have a daily profile for entire session. That is right here. So these are my daily profiles, 1 hour chart where I do my work, plan my zones. As you can see, these worked pretty decently. I have no zones going further. I did have one here and I took it off because it broke and it held and then it held here. So I'm like, I don't know if I want to play a reoffer here. As you can see, if I kept the zone here, it would have been pretty nice, but still, I think we're building too much around this spot overall that I'm just gonna look at it as a range of balance and I'm not gonna try to pinpoint anything within it. So these are my daily profiles. This is an RTH only profile, New York session only. Playbook will have all you are curious about in terms of how I use the profiles. It is highly in-depth. I melted my entire brain and rebuilt it for the sake of the profile. So, do I find it hard to wake up before market open? Absolutely. That's why I don't do it. Absolutely. On Fridays, it's close. On Fridays, actually, yeah, on Fridays I wake up before because I'm on at my time 7. So I'm up by 6. Uh, yeah. Fridays with packs. I trade full time, but I also have another income source. So it definitely helps with risk, risk allocation and not being so hung up on P&L. Steve, I'm glad it helps. Glad it helps. Darrow, glad you liked it. Yeah, I'm happy to hear that I'm still providing value for you guys. Orderflowlabs.com is where the indicators are. Some are free, some are not. So the bottom one's free. Uh, the one I use for high time frame right here, the weekly MGI is free. Every line you see here, every like plotted line, these are automated. That is also free. So there's a lot of free stuff. Just get the freemium and see how you guys like it. If you guys don't like it and you don't like it, don't pay for the paid stuff. And yeah, there's a free version just to see if it's for you or not. Is not linear, he is polynormal. I'm assuming you're saying I'm not linear. Thanks, Chris. Hey, Chris, yeah, I don't know if you got my message. I didn't know you messaged me on Friday. I just saw it yesterday going through DMs, but sent you a little something. Flow state. You have to use the order flow package uh on NinjaTrader. So you have to get the order flow plus package and use that profile. And then you can, in the settings, you can segment that profile for 5 days or this, or every day is a different profile, stuff like that. I think, hold on. I will tell you right now, I honestly, a lot of times I don't know what I'm talking about when it comes to platform stuff. So, oh yeah, here you go. So this is a different profile. Oh yeah, it is. So you have to go on the NinjaTrader profile right here. Standard sessions. Right here. So you go put under sessions and then one session, and every session it populates something else. Shreddy, I don't get paid by Flow Labs. I am not I'm not an employee or a partner. So yeah, anyone in here that is wondering if I am employed by or work for Orderful Labs or have any financial special interest in Orderful Labs, I do not. I don't even get affiliate anything from them. So I'm a free agent. I am a free agent. Well, technically, I guess I'm not a free agent. I'm signed by a NinjaTrader. If I need a mentor, yeah, I'll let you know, Jose. Axel, what's up? Glad you're here. Glad you're here. Yeah, man, dude. So we're working with NinjaTrader on trying to get um I will say a more usable DOM because of how I like to use it. We are working with them trying to get that done. I don't have a time frame for you guys. I don't know what the progress is, but if and when we do have one that we can really use, you will see it up on our screens. We are definitely looking at order flow on a price ladder. Darrow, do I think a second income is a must to make it in trading? Let's say a year's worth of bills paid, second income. Is it a must? I don't know. I don't want to be black and white about it, so I'll say it's not it won't be a must. But would I definitely encourage it? Yes. I have a rule for my personal friends. I will not teach you how to trade if you don't already have stable income. I will refuse to do it because then I'll feel like any blood will be blood on my hands and I won't be able to sleep at night. So that's how I feel about having income prior to trying to learn how to trade. There was a guy very early on, it might have been me and Stowe's like first week on NinjaTrader Live or something, and he asked us, "Hey, should I quit my job and trade full time?" We told him absolutely not. I don't know if he's still here. I don't know if he still tunes in. He did tune in a couple months later and let us know that he did not quit his job and he's happy for it. But if, yeah, that's my thing. I think that says enough. I refuse to teach even my closest personal friends how to trade if they don't have a job already or some sort of stable income because that blood will be on my hands. And there will be blood and it will, I think there's a huge survivorship bias in the game. Anyone who's made it without another source of income is probably a 0.00001 statistic. So keep your jobs until you make way more than it on a regular basis. Because money is just one thing. Um, there is a huge pressure and stress component that will come along with it. And you could be a great trader without it, but if you tack it on, you will be the worst trader. It can flip that easily. So, strong opinion about not having trading be your only income if you're still getting your feet on the ground. Yes. Yeah, so fly it here or fly it there. I'm not sure what your name says. I'm guessing it's fly it here. He says, I make more than my regular job, but still keep it. Yeah, there's a lot of value to that. A lot of people might say, yeah, I make a lot more, or I make more than my regular job. Why would I keep the job? There's a good chance too that the job is the reason that you're able to trade uh appropriately. You don't have that extra pressure and all that stuff. So it could be a huge like intangible benefit that people might not be realizing. Give me a sec. You guys will not believe this. Leo, Mr. Tiger is calling me right now. Here, let me. Hey, Leo. Leo, you're on air. You're on air with the entirety of NT Live right now. Yeah, you're calling me while while I'm streaming, man. But I just responded to you. I got you. I got you. Anyways, that was Leo hopping in. He needs a cover. he needs a cover for midday markets tomorrow. So I guess I will see you guys again tomorrow. Yeah, he just tagged me, messaged me, and I didn't see it because I'm on stream, and I guess he's like, I need to call this guy. And um backtesting previous years help or improve. I think backtesting is huge in a lot of ways. Um, but for order flow specific stuff, you really want to you want to replay mode it because then you can get the actual like how it works, right? Backtesting with price charts makes sense because I know some people are very mechanical, right? They won't interact until a candle closes. So if that's your thing, backtesting is totally good. It's as good as it can be, honestly. But if you execute in a way where you don't care how a candle closes and you will do it based on how it develops, you should probably replay mode that thing rather than backtest. Um, yeah, so I see Jeff's comment. Right. Obviously, everyone's got a different opinion. I've just seen too many bad things with trading and people trying to do it with any kind of pressure tied into it. That's especially financial pressure. I don't think I've ever seen anyone come out the other side off of that. So I'm gonna, in my experiences, there are no survivors. And I think anyone who does survive, taking the maybe the biggest gamble of their life could be survivorship bias. But I just haven't seen it. So that's just my opinion is not that, like I said earlier, I don't want to be black and white and say it's impossible, but it's improbable, I guess you could say. And it's like, what's the harm in keeping the job, right? You can definitely learn. Obviously, it's very difficult if it's not work from home. A lot of my friends, they're in corporate, jobs where they can work from home and stuff like that. So you know how that goes. Anyone who works from home, you should probably be working right now. But you know how that goes. But if it's, yeah, to Jeff's point, if it's something that pulls you away from the markets physically, it's going to be very difficult. And at some point, you will have to make some gambles for sure. Um, 1 hour profiles looking like continue low. Well, I mean, even the current day's profile. So what I'm looking at now is we had a real attempt. We got further progress. We got another one and fell back into the one prior that led to higher. This should not fail. And if this fails and we come back and we make our way back in this range, which is why I held on to that short, we do have enough information. The market itself has enough information to know, hey, this is just not a sustainable up move, right? Um, yeah, so volume profile does indicate that there's upside weakness. But then they're going to go and make the decision again. So in my playbook, I outline at some point that there's a lot of decision making, right? And as the market makes the decision earlier, hey, no lower, no interest, we're just not willing. Eventually you go higher, and if the decision then is no higher, it's just not going to happen. When you come back to the lower part, now the market knows this, right? If there aren't willing buyers up here, you can't really hold to sell up here anymore. If anyone wants to still sell, they're going to have to sell with price lower. And at some point, they're going to get back. So they're making a decision again. So now the sellers do have the information that if I want to sell higher, there's just not that much. Am I willing to push to sell then? Right. And then they'll make the choice. If again, we see this is a sell attempt, by the way. If we still have the answer that down here there's not enough sell interest, where does the market have to go? they have to go up until they find it again, which is probably up here outside of 800s. And if not there, this thing can just keep climbing all the way up, because now as price has left the range, came back and tested the other side of this range, again, the information persists. Too many buyers in this range as opposed to sellers. So vice versa, the sellers or the buyers do have to understand at some point, if I still need to buy, I have to do it higher, because there's just not enough sellers in this range anymore, and they're going to push the market back. So every time the market goes somewhere where it's decision time, it's going to be new, more recent information. Do not hold on to older biases where the information's already found. If you're looking for a short down, that's fine. But when they do this, there's new information. I wouldn't be looking to fade this again just because, you know, it worked last time. It's probably going to work again. They found new information, right? And because it works again and again, then you can speculate, all right, well, now there's enough information that there is not enough buying here and enough selling here. So you can revert, you can mean revert, you can mean revert, and then it breaks. So information is constantly changing. Jeff, I don't see a problem with that at all. He says, I can't bring myself to make the trade. I just be trying to guess scalp, and I'm just not good at that. I don't see an issue with that at all. Not trading this market. This is not everyone's favorite market. I would assume most people hate this kind of market. I don't entirely like it much. Um, but I think that's a huge edge that you can distinguish. Not only that it's difficult for you to get access into any trades, but it most likely means that, one, you're not good at it, and two, it probably doesn't produce great results. So you just don't do anything. Not every day is like this. There's going to be another day. It's going to be another hour. Maybe it breaks later. Maybe the market decides, okay, this value range, too many buyers, and we're just going to auction up for the rest of the day. You never know. But I think what you're doing is totally sensible, just not doing anything. So Rogan, very good point. In trading, it's not that the more work you do, the more you get compensated, because you do take risk. So there's also the other component. I've gotten 0 longs, Darrow. I've only gotten a short and another short. So 2 shorts. Good morning, Nautilus. Crude Walla says, love the way you weave the market to a story, that you talk us through. Guess you're a trader first, not a course seller. I actually don't have anything for sale. I have a playbook that is going to be out there for free. So, do I count scratches to determine if I overtraded? Yes, they count. To me, taking risk off also means that the read that I thought I had is not the reality of the market. And if I'm consistently reading things that are not the reality of the market's just not speaking to me. And at some point, you have to accept that. Anyways, glad you guys are on. I haven't begged you for likes yet, so if possible, please hit the like button. I will be on again later today in the afternoon with Leo, and I've just found out I am doing midday markets tomorrow again. So exact same schedule tomorrow for me. It will be midday markets into the close with Nick.
Hardest working guy in showbiz right here.
Yeah, I'm giving them the schedule ahead of time. It's going to be Stowe and Kane in the morning.
So this
What would
afternoon,
make me...
though, you're back with Leo this afternoon, trading the close.
Yes.
Awesome. Very, very awesome. Well, good job today.
Appreciate it. Appreciate it. It's not been too bad.
Tight range, though, man. We're way, way off the
Super tight
ATR.
range.
Yeah.
I am just glad that I made any money at all in this range, so I don't like it. a lot of people are saying in the chat that it sucks for them and they can't do anything with it. Honestly, I don't like it either. It's like a barcode. It's just a barcode market.
Yeah, it's the xylophone pattern, we call it.
Yeah.
So fantastic. Well, thanks for being here with us. Thanks everybody for the thumbs up. Let's do it again for XYZ. If you haven't hit that thumbs up button, let's press it. We're getting closer, 150K subscriptions. Maybe we'll reveal how close this afternoon. We're getting super close. So thank you for the subscriptions. If you haven't, click on that button. It's free. Doesn't cost you anything. We won't bother you too much. Love to have you here at NinjaTrader Live, everybody. Thank you for being here. We're here every day, 8 o'clock to 8 o'clock a.m. Do you believe we start that early? That's like 5 a.m. your time, XYZ.
Yes, it is extremely early. The sun just went down at that time.
Anyway, 8 to 12, then again 2:30 to 4. So looking forward to that. So XYZ, thanks again. Appreciate it. I look forward to seeing you again this afternoon. We're going to just leap into a edge report and finish the morning stream.
See you guys.
All right, here's the E-mini S&P. Here's what I'm talking about. It's a 24 high to low, just measuring the peaks high to low, 24 handle range today. You know, the ATR is 54, so we're not even close. It's a really, really tight range here, and you can see, you know, the volume profile isn't bad. It's kind of a nice Gaussian shape. A lot of meat in the value area. It's a tight value area range, correspondingly. It has to be, right? So it's very, very interesting. So one of the things that I'm thinking about, I went to Edgeful. I got some stats for us, and I was like, all right, where is the have we closed the regular trading hour, gap, and we haven't. It's up here. It's up here. It's at 67.14.25. We just missed it by a couple of ticks, right? There's a 67% chance on a Tuesday, based on a 6-month look back, that we're going to close that regular trading hour gap. We're not there yet. We'll see. Unfortunately, here we're trading below the session VWAP right now. We're trying to trade above it, and look how many candles we literally traded through it. 1, 2, 3, 4, 5, 6, 7 times we've traded through that session VWAP. That just shows you how tight this day has become. So we'll see if we get a breakout to the upside, or at least that RTH gap fill. We have S1's kind of, we didn't even get close to S1 on the downside here. Really, we got a high vol level kind of establishing the bottom here. And the initial balance is in, you know, we're smack dab in the middle of it again, right? We haven't even had an initial balance break based on a candle close. Yeah, we had a couple wicks up and down, but big deal. That's just regular volatility. So that's the story of the E-mini S&P. Let me kind of move over to the Bitcoin. I want to talk about the Bitcoin. A lot of chatter about, whoopsie, that's the wrong one. Bitcoin, a lot of chatter about the Bitcoin today, and a lot of opinions about this market in general. But, you know, again, we're range bound. We're right in the middle today. We have a little bit of a sell-off. We're nowhere near the midpoint of the previous session's mega green candle, which is good. We kind of tapped it almost right by that 80 EMA. The 21 EMA is right above that, and the 50 EMA is right there as well. So we're kind of a little bit of a pullback, but still pretty much in the middle of that range that I have highlighted between 118.5 and 108 for the micro Bitcoin. Target-wise, tight range for this market as well, but this is kind of a small case B distribution. Someone might argue, well, it's really a double distribution. I don't know. This was kind of overnight volume way up here around 115, 200, give or take. And, you know, ever since we kind of broke that VWAP line, that was at midnight. And then we just kept going through call resistance, through JAX4. And then we're kind of settled again in that initial balance that we're seeing right here. IB range from this morning based on the RTH open for the equities. And we're kind of establishing a point of control a little bit south here at 113.825. We have a really nice competing point of control at 114.025. My guess, if I had to guess, we'll be kind of range bound between those 2 points of control for probably the rest of the day. Although, you know, who knows, right? A breakdown can get us to JAX3 at 113,000, and then that one-day min is right below that at 112. Real quickly here, let's just throw in the 10-year notes. This is a market I've been watching all morning long. And let's just go to a daily. Yeah, we're still kind of, look how in consolidation, we're right above that, below that 8 EMA. The story today is we kind of tried to rally on the news this morning, and then sellers pushed us back down. See that big wick on today's candle? So this candle is, I don't know if it's a shooting star or what you would call it, or a gravestone doji, or it's not looking good. Sellers are kind of pushing us back down to where we started from today. Small body candle right now. If you take a look at the intraday, also tight range. We did get to that call resistance level, and R2 kind of defined the top of the conversation at 112.24, and I was kind of excited about possibly a breakout to the upside to the one-day max, but no, not the case. Sellers pushed us back down again, which means yields climbing up a little bit as this price keeps on heading down toward that JAX 1 at 112.16. So we'll keep an eye on this 10-year note just to kind of get a feeling for what's happening with the interest rate picture. It seems like there's 2 cuts built into the cake at the CME Group FedWatch tool for the next 2 consecutive Fed meetings. This will probably change radically. We'll find out as we get closer and closer to the meetings. That is this afternoon, late morning Edge Report. We are going to be back this afternoon, 2:30. Me and Shai kicking it off. And then we're going to have XYZ and Leo, the tiger, the big cat, is going to be trading the close side by side today. And there should be some movement. Hopefully, we'll get some breakouts one way or the other in some of these markets. And then maybe we'll talk about the metals, particularly gold, a little bit more this afternoon. Having said all that, thank you, everybody, for coming. Thanks for the thumbs up. Thanks for the subscriptions. Thanks for helping each other out in the chat. Greatly appreciate it. One last note. Last Wednesday, me and Mike Burke did the how to order entry on the desktop platform. So this time, this Wednesday at 4 p.m., we're going to do something similar, only for the web-based. Maybe you're using Tradeovate, NinjaTrader Web. We're going to do also order entry techniques using the web-based platform. So that's going to be 4 o'clock. We'll cut and paste the link in this afternoon. It's the same link as last time. So if you still have that, you're good to go. So that's Wednesday at 4 p.m. East Coast time. Having said all that, relax, have a great lunch. See you guys this afternoon. Thanks for coming.